perspective is I don't think you're going to see the levels that we saw post-Liberation Day. I think the lows for the year are likely in unless you get a pretty dramatic shock to the market. I think, we're going to continue to trade around tariff headlines. Companies are trying to think about how they can manage tariff risks. Investors are trying to think about that. But in terms of the broad equity market, I think the lows are in for the year, and we're just going to continue trading and chopping around with some of these headlines.
Does this market expect a base tariff rate of 10% globally? Because if that's the case, it pays off and then some the deficits projected by the CBO. Now, they may be lowballing the deficits we get from this tax bill, but the market seems so sanguine, right? Rates have come down. 435 on the 10-year is a long way off from the danger zone.
Yeah, absolutely. I mean, I think we're for the rates as we're looking for 4.5 as the level where that could become a risk to the equity market. That's where you typically see correlations between yields and equity prices turn negative. We're far off the danger zone there. I think the tax bill is the next thing that the market's been thinking about, but we still have a lot of negotiation to go around that.
Is the stock market thinking about what's going on with the tax bill? It feels like it's being very clearly expressed on and off in the rates market. But when it comes to the stock market, I feel like it's a much less clean sort of correlation there.
Absolutely. I think it's a much less clean story, but there's still so much negotiation to go on there. We don't know what the final version of that is going to look like. But from our perspective, we're looking for policy to become more beneficial for the equity market in the back half of the year. We're looking for potential benefit from the tax bill. We're looking for more benefits from deregulation. Maybe the M&A market starts to pick back up around that. But really, first half of the year, policy sequencing has been negative. Back half of the year, more positive on policy.
We had your colleague Andrew Sliman on yesterday. He's been crushing it in terms of returns, right? Beating his benchmarks. You're thematic and equity strategist.
Yes.
What are the themes that you're looking at? What are the ones you like?
So I'm really excited about the AI adoption story. So far, AI has really been, the value has been accruing to the enablers, the people who are making the picks and shovels, allowing AI to be adopted at companies. But now it's time for companies to actually start putting AI into production. And we're a lot more constructive about in late 2025, early 2026, starting to see that become positive for company margins.
Well, talk to us about how that all filters through the S&P 500, because I hear what you're saying, that maybe we'll start to get some of that positivity from, AI actually being used by these companies, but that's not until the end of the year. But then you also talked about the sequencing of we're possibly going to get more market-friendly measures when it comes to taxes, when it comes to deregulation. You add it all together, what does that mean for the S&P 500's trajectory through the remainder of 2025?
Yeah, so we're overall pretty constructive on the S&P. We recently put out our mid-year forecast for next year at 6,500, so fairly constructive on the index overall. And then I would say the next key thing to look for the equity market is what's happening with earnings revisions breadth. We've seen earnings revisions breadth start to hook up pretty substantially for the market, and we're also seeing that metric driven more by positive revisions rather than a lack of negative revisions. So that is something that we're watching, and it looks like the earnings picture is now starting to clear up for the rest of the year.
Is the U.S. still your preferred place to invest? I mean, you are the U.S. thematic and equity strategist, but do you look at your European or Asian colleagues with a little bit of jealousy?
No, we're still, as a house, we're still calling for U.S. over international. That's partially a function of the better earnings revisions breadth picture in the U.S. versus international. And it's also about the dollar. Our forecast is for 91 on the DXY, which represents around a 17% move from the highs, and that will be really beneficial for multinational companies' earnings in the U.S.
17% move down.
Yeah.
From the highs, yeah. Yeah.
All right, we got to leave it there. Unfortunately, Michelle, really great to speak with you. Hope we can do it again soon. That is Morgan Stanley's Michelle Weaver. Meanwhile, let's get a check on this market, which is taking a bit of a leg lower in the first 18 minutes of the trade. I want to take a look at the breakdown right now. When you look at the single stock level, we started out, again, in the green, but now you can see that the breadth is getting worse and worse. You have over 300 companies in the red right now, just about 174, 75 in the green. What's still leading, and this is good news, is some of your big tech names, Amazon, Alphabet, Microsoft, the list goes on, but very small moves overall. So that downside starting to overwhelm here, because right at the top, Tesla down almost 6%. That's taking 6 points off the big index. NVIDIA too hurting as well. Then you have the likes of Costco and Eli Lilly. Let's take a look at how this is translating into the sector picture as well, because up at the top you do have communication services, but a small move. Again, energy and materials also fighting to stay green right now. Then you go down the bottom and you absolutely have more red than green today. Financials, consumer discretionary, and consumer staples, Matt, some of the biggest laggards in this market right now.
All right, let's shift gears here for a moment and talk about the jobs market and really Google, because Alphabet CEO Sundar Pichai says his company will continue emphasizing human talent as the AI boom continues. They'll continue hiring humans instead of trying to replace them with artificial intelligence. He spoke last night at the Bloomberg Tech Conference in San Francisco.
I expect we will grow from our current engineering base even into next year. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. People will be able to do more, which means maybe we'll create new products, and hence we will need more people, at least in the near term.
Joining us now is Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. And Mandeep, it does look like we're going to need a lot more engineers. Even with AI, we won't need as many private equity fund managers, apparently.
According to the Vista CEO.
But what's your outlook for hiring in Silicon Valley?
I mean, look, Microsoft just did a layoff of 6,000 people, 3% of their workforce. So from that standpoint, it's surprising to hear him say that he's looking to hire more engineers. At the same time, everyone is looking for ways to do more in terms of AI agents and just, the field of large language models. It's evolving in terms of how their search product is changing. So look, there are a lot of optimizations that will happen in terms of the engineers and how they'll be used across different products within Google. But at the same time, there is still a lot of demand for people who understand, this field of large language models, and that's what I think he was alluding to.
I also want to talk about, this is a long-term story that we're talking about when it comes to labor, human versus robot labor. Let's talk about what's going to happen after the bell today, and that is Broadcom. It feels like the stakes are really high for this company. If you take a look at its one-year performance, it's up about 86% on a total return basis. NVIDIA shares up just about 16% in that time. So talk us through what you're expecting when we hear from this company after the bell.
Yeah, look, we saw NVIDIA grew 70% despite the China headwind, and they wrote down, quite almost like 7% of their revenue that they couldn't sell to China. Broadcom has a very high exposure to Google. Almost 50% of their AI revenue comes from Google TPUs. And Broadcom is a much lower run rate, $18 billion business, as opposed to NVIDIA, which is almost close to $200 billion on the AI side. So clearly there's a lot of runway for Broadcom. And Broadcom last earnings mentioned they added 2 new hyperscalers. Now those 2 could be OpenAI and probably Meta or someone else. Maybe they are exposed to Project Stargate. We don't know exactly. But clearly they are gaining more customers who are thinking about moving out of NVIDIA's ecosystem and doing more custom ASICs. So from that standpoint, I think any new customer they add will add, probably 10 billion plus in revenue down the line for Broadcom. And it is somewhat of a zero-sum game to my mind. If you're moving away from NVIDIA, you're probably coming to Broadcom.
All right.
All right, there you have it. And hopefully we'll be able to name those big customers soon. That is Mandeep Singh of Bloomberg Intelligence. Now we also want to talk about Lululemon, the next big retailer to report earnings, with the first quarter results coming after the bell. Bloomberg Intelligence says that sales growth could slow to as little as 6%, weighed down by, you guessed it, tariff concerns and consumer spending. Shares are down more than 12% this year, but higher by about 9% over the past year. So let's break it down now with Bloomberg Intelligence senior U.S. retail analyst Poonam Goyal. So Poonam, we had Gap report in the last couple of weeks. It seems like Athleta didn't fare too well. How does that tee us up for Lululemon after the bell?
I think it's a little bit of a different story here. Lululemon has made progress from where it was with really getting better merchandise and a color wave in stores. So we do think that this quarter will shape out to be in line with their guidance, which is for a 6 to 7% increase. The one thing I'd say that Lululemon is doing well right now is that they're adding a more casual flair to their assortments. And that's interesting because as wardrobes shift and consumers rebalance it, moving away a little from activewear and into more work casual wear, they're going to benefit from that.
Yeah, I have to say, I exclusively wear Lululemon pretty much to work. So
I hope they don't get away, though, from the yoga
what?
pants. I just like this, the standard yoga pants.
All right,
you know?
for yourself, I assume you're talking about.
Of course.
Who knows? Moving swiftly along here. Talk to us a little bit about the competitive environment here. I mean, when you put aside tariffs and consumer spending concerns, which is hard to do, I mean, you think about the fact that you do have Athleta, you do have Vuori, you do have Alo. It feels like this space is getting more and more crowded.
I think the space was actually always crowded. In addition to those names, you also have Nike, Adidas, and the traditional activewear companies really making a big push on fashion style to get them also in that, casual athletic flair. What I'd say that Lululemon is doing well is they have the customer base, right? They have a loyal following of people who just love what they have. And as long as they get the assortments and the color palette right, which is where you could say, messed up a little last year, I think they're still on the way to gain share, especially internationally, where they do have a goal to quadruple sales. And I think they're going to be able to do that for 2026.
All right, Poonam, thanks very much. Poonam Goyal from Bloomberg Intelligence talking to us about Lululemon. 40 analysts cover Lulu on the Bloomberg terminal.
Right.
20 buys and 20 not.
Yeah.
So, and they've just been up and down, up and down, up and down, and finishing like unchanged over the last 5 years.
Yeah, it is pretty amazing to see it pretty much flat over the past 5 years, to your point. Extremely high peaks and valleys there. Let's take a quick check on this U.S. market overall, though, because I'm a little bit surprised here to see gains fade, those pre-market gains that we saw after we got news of that President Trump, President Xi phone call. We're now pretty firmly in the red here.
Well, nothing came of it, and
right, but
they
got on the phone, which was hard to do.
True. I mean, he got on the phone with Vladimir Putin.
That's true as well.
And there's not any peace in Ukraine right now. Coming up in the next hour, Emily Rowland joins us from John Hancock. She says earnings growth is diminishing. We'll talk to her as well as the man behind Sony and Honda's smart car. This is Bloomberg.
Another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There you understand the history of this great land, not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Breaking the ice on the president's budget bill. Sources tell CBS News House Speaker Mike Johnson and Elon Musk texted last night, and they agreed to speak by phone today about differences over the package Mr. Trump calls big and beautiful. Musk has trashed it. CBS's Torian Small looks at the numbers.
CBO put out an estimate that has about $2 trillion in additions to the deficit. And then, of course, this bill comes with a $5 trillion price tag that would lift the debt ceiling, which hasn't sat well with those fiscal conservative hawks.
Musk is calling on his followers to urge their congressional representatives to kill the bill. We've just learned from Chinese state media President Trump and Xi Jinping spoke by phone today. The likely topic of conversation, stalled tariff negotiations, roiling global trade. Filings for first-time jobless benefits haven't been this high in 8 months. The Labor Department reports they rose by 8,000 last week. President Trump is resurrecting and expanding a travel ban policy from his first term. Correspondent Ed O'Keefe.
It targets people from specific countries in the Western Hemisphere, like Haiti and Venezuela, as well as places in Africa like Libya and Somalia. There's also Afghanistan and others.
Prosecutors have released never-before-seen journal entries they say were written by Luigi Mangione, the young man charged with murdering United Healthcare CEO Brian Thompson outside a New York hotel in December. CBS's Lilia Luciano.
Prosecutors allege Mangione wrote, quote, 1.5 months. The investor conference is a true windfall. It embodies everything wrong with our health system.
Cleanup continues in Baltimore's Inner Harbor. WTOP's John Doman.
First it was hundreds, now at least 2,000 gallons of diesel that have leaked into the water there, and crews have been working nonstop since yesterday to contain it.
This could have been far, far worse than what it was.
Baltimore City Fire Chief James Wallace is the incident commander.
We've since then located where we believe the leak occurred.
Now they're pushing the fuel into a containment zone in the harbor so it can be captured. A bigger disaster will be avoided if it doesn't rain.
We're absolutely on schedule.
John Doman for CBS News, Washington.
The Israeli military says it's recovered the bodies of an American-Israeli couple killed in Hamas' October 7th attack. The BBC's Barbara Platt-Usher.
The kibbutz where they lived has put out a statement saying that they had a normal routine of walking around the kibbutz in the morning, and during that time they were murdered and their bodies taken into Gaza.
The Dow is down 185. This is CBS News. It's a big day for video gamers.
Long lines from Tokyo to Toronto and at a Best Buy in Burbank, California.
The line was wrapped around the building. It was so long.
He got what a lot of people want, Nintendo's much-anticipated Switch 2 video game console, which has gone on sale. It's an upgrade to the company's 8-year-old predecessor. Tech contributor Ian Scher says it launches in a different environment.
Now phones are much more capable of playing video games, and tablet gaming devices have become much more standard across the industry.
The Switch 2 retails for $449.99. Steve Kathan, CBS News.
A senior prank at Malibu Highs caused tens of thousands of dollars in damages. Students superglued locks to classroom doors, set a golf cart on fire, and pushed it down the stairs. This classmate gives him an F.
For it to be a prank, it's not even funny anymore.
Police are on the case. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Alex Steele, Paul Sweeney with you here. We've got a busy day today. Lots going on. Economic data, which we will get to. We're also maybe waiting on some decisions from the Supreme Court. If those come down this morning, we'll bring you reporting on that. Michael McKee, International Economics and Policy Correspondent, will give us his thoughts on some of the economic data we've seen over the last several days, how it may impact the Federal Reserve. Adriana Lowenkron, she's a Bloomberg News White House reporter. Apparently, President Trump and President Xi had a phone call today. We'll get the latest reporting on that. Nancy Daoud, private wealth advisor at Ameriprise Financial, and she'll give us her thoughts on these markets here. And the markets are pretty mixed here. Let's get a lay of the land on the markets. We'll go to John Tucker in Bloomberg.
And guys, this Bloomberg Business Flash being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/round-the-clock. Right now, we have the stocks lower right now, the major averages. Initially, Paul, we did get some optimism from that phone call between President Xi and President Trump. Don't know what they said, but that confidence seems to have wavered and evaporated right now. S&P 500, 10 points lower. That's down about 0.2%. 59.59 on the index. The Dow Jones Industrial Average 107 points lower. The NASDAQ 100 right now down 15 points. Lots of data today. You heard that companies stocking up on stuff ahead of the tariffs, front-loading. That could be over. The trade deficit narrowing in April to the smallest since 2023. And then earlier we had applications for unemployment benefits unexpectedly rising last week to the highest since October. And of course, this comes ahead of the non-farm payrolls report. Get that at 8:30 Wall Street time tomorrow. Broadcom, they reported after the close of regular trading. Those shares ahead of that, they were a little changed, but the price has surged, making it the 7th most valuable company in the S&P 500 with a market value of $1.23 trillion. So it could be a lot riding on the results that come after the close today. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul. It's so nice to have you in the studio.
Yeah. We came back. We decided we'd come back for you.
I missed you.
So I know it's lonely here without us, right?
Yeah, my Acela experience was fine both ways. Just lovely way to travel.
Yeah, it wasn't. It's just it feels long though.
But if you're going to pay as much as airfare for a train, why not
but the
fly?
train, you just walk, you go right to Penn Station. You
There's
walk
no
on the
TSA.
train.
There's no security. It's like it's a different kind of stress. I'm with Paul on this one. I'm sorry, but you and Mike can fly, and Paul and I will take the train. All right, Alex Steele alongside Paul Sweeney. We are joined now by Bloomberg's Christina Kino to look at some of those stocks on the move today. All right, let's kick it off with Dollar Tree.
Yeah, let's take a look at Dollar Tree. I mean, those shares gaining more than 4% now, extending those opening gains. And, you know, we did get the discount retailer warning investors fears that its second quarter profit could be down as much as 50% from a year ago as it deals with tariff-related costs. But then today, we have JP Morgan upgrading it to overweight from neutral. And analysts are actually saying that there are some positives in the report, including traffic growth and same-source sales. So, yeah, Dollar Tree, ticker DLTR. Shares are up on that JP Morgan upgrade.
Nice. Well, JP Morgan has that impact. Kimberly-Clark, what's happening there?
Yeah, Kimberly-Clark, ticker KMB, that's down now more than 2% at the moment. So again, extending those opening losses. And that comes after the news that they're going to be selling a majority stake in their global Kleenex and tissue businesses outside of North America. And so the deal is that it's going to be forming a joint venture with this Brazilian pulp supplier, Suzano. That's going to be valued at more than $3 billion. And it will have a 51% stake. It will also have the option to buy Kimberly-Clark's ownership interest at specified times and conditions.
You know, I did a rotation in investment banking with the consumers team.
Oh, cool.
And it's a banker's dream because all these big consumer products companies have brands. And all we do is we just update the valuation of all the, I'm talking hundreds of brands. And you just put valuations on them and you just mix and match the way you pitch it to the CFO. Hey, why don't you take these 3 brands, sell them here. I think I got some buyers here. And you just do that all day long. That's all they do. And sometimes they hit, like this one.
Amazing. I also have to say that when it comes to tissues and Band-Aids are the 2 things you can't get generics for. You just can't.
No.
Really? You just can't. Just those 2 things. Everything else, like generic all the way. Even toilet paper, generics, all right. Paper towels, not tissues and not Band-Aids. This is my PSA for everyone. All right, Brown-Forman tumbling hard here, down by over 15%. So this is the owner of Jack Daniels. They'd already been warning about a tariff impact. So what happened now?
That's right, Alex. And so, yeah, we did see that in their reported after bell yesterday. Fourth quarter EPS and sales missing estimates. And they're also expecting their fiscal 2026 organic net sales to decline. So it's not just fourth quarter bad set of results, but also their outlook not looking so great. And so from that report, Brown-Forman saying that they do anticipate the operating environment for fiscal 2026 to be challenging. They're citing low visibility due to macroeconomic and geopolitical volatility. So that's ticker BF/B, tumbling now, more than 50%.
I just don't see how these tariffs are good politically. I mean, now you're upsetting our friends in Kentucky and Tennessee, and I just don't.
Tax cuts? I don't know.
I guess, but boy, I mean,
create more American jobs? I don't know. I'm just saying what we hear.
I'm just wondering.
I mean, it's a fair point. It's not great. And then plus in general, like, do we drink as much in the U.S. as we used to? I'm looking just at Paul at this point. I don't know why I'm doing that, but
certainly not as much as in the UK. I can tell you that much.
Oh, okay. All right. Yeah. Good combination there. All right. Thanks so much, Christine. We appreciate that. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports and the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere that you listen. All right. We got a slew of economic data that came out this morning. Initial jobless claims, not great. Unit labor costs higher. Productivity lower. It didn't feel really great. Let's get Michael McKee, Bloomberg International Economics and Policy Correspondent. How would you describe this data this morning?
Not great.
Is it like a B minus, C plus?
You know, maybe I'd give it a B minus at this point, and I'll explain why. But first, I did want to mention something. You were right. You're right about Band-Aids. This is one of those facts you learn that you never get to express anywhere. But I know somebody who is in the business of retailing things like that. And a lot of companies have generic brand Band-Aids. And the story is that they cannot afford the Chinese-made generic Band-Aids anymore.
Really?
They're going to have to raise the price so much that they lose the value of having their own brand. So
there you go.
This could be a thing. You may have put your finger on the whole problem with tariffs is can't get generic Band-Aids anymore.
No, but also generic Band-Aids are bad. That was my point.
Oh, well, I'm going to stay out of that one.
I'm serious. Okay, anyway,
all right.
We digress.
Jobless claims are bad, 247, but it's the highest in 8 months. But the problem is, and unfortunately, I have only a black and white chart, so we can't show it on the color radio. But this is the time of year when we start to get into seasonal distortions that have gotten worse since COVID. The non-seasonally adjusted jobless claims went down, and the seasonally adjusted went up significantly. And this has been happening for a couple of weeks, and then you look at the last couple of years and you see the same pattern. So is this a message about what's going to happen? Maybe. Or is, Neil Dutta and I were talking about it, and he says yes. Or is it just sort of a head fake? Maybe the auto companies have started retooling earlier because they aren't selling as many cars, don't need to make any cars, they have some space to do it. So that's something to keep an eye on at this point. We've had a lot of announcements. Disney, Procter & Gamble today about layoffs, although Procter & Gamble said 7,000 over 2 years, and they didn't say what country. So we're not sure yet, which is part of the reason that you have to take this, not so much with a big grain of salt, but just say, okay, that's interesting. Let's see what happens in the next couple of weeks. Other than that, the trade balance is not a surprise. We saw that in the advanced trade numbers because we stopped buying things from overseas. Imports went down 15.5%, which is the biggest fall on record. And the trade balance falls by more than half, which is the biggest fall on record. But think back to the first quarter where we had bad growth figures because we imported so much. This is going to have the opposite effect. And then while the unit labor costs that Alex mentioned are old news, I mean, this is first quarter news, it does suggest that there's higher pressure on prices for companies. And it's part of that whole, are we seeing an inflation and stagnation thing at the same time?
Which is kind of what you were talking about yesterday, Paul.
Yeah, I mean, a lot of the notes I got from Wall Street economists, I kept seeing stagflation in the title, so that's coming back. But if I look at today's data, Michael, as you were just explaining it, as well as yesterday's ISM data, I think these economists are kind of getting it right. They've been telling us, maybe not the tariffs themselves, but the uncertainty associated with tariffs, that could lead to slower economic growth, and that could lead to higher prices. I don't know. It feels like that's coming to fruition right now.
Well, that's one of the things that Fed officials have been talking about, that companies have been sitting on the sidelines, not sure what to do, but at some point they're going to have to make a decision. And some of them may be coming off the sidelines now and just going ahead and raising prices in advance of tariffs. Some things have gone up in price, but just betting that something's going to happen. Part of it because they want to protect their margins, and part of it is they're probably testing the waters. We saw in the last inflation, when it started, people were raising prices more than their costs were going up because they hadn't been able to raise prices in years. And so they were taking advantage of it. And maybe that's a little bit of what we're seeing now. There have been some studies out recently that suggest that when Trump announced the tariffs, people raised some prices. Then when he put the 90-day hold on it, they didn't lower those prices. So businesses are maybe not anxious to test whether they lose market share, but they're willing to do it if they think that things are going to continue in that direction.
All right. Mike, thanks a lot. Really appreciate it. Michael McKee, Bloomberg Economics and Policy correspondent. Also, I lost my kid, so if you say, oh no, she's back.
Yeah, she's back.
I didn't know she was back. I was like, can you go get my daughter for me? Who's roaming around the office? Never mind.
No.
Oh, she snuck in very quietly. Look at that. All right, Mike, thanks a lot. Really appreciate that. And then, of course, Jobs Friday tomorrow going to be quite interesting. We typically wind up seeing actually the S&P up on Jobs Day. Terrell over at the desk made a really good chart on that, so we'll see if that holds.
I'll tell you how important tomorrow's Jobs Day is. I'm coming in tomorrow.
Yeah, that's because it's raining. I don't think this is actually like a really good indicator. It's because it's like I'm gonna save my beach day.
Yeah.
All right. Coming up, we're gonna break down the markets with Nancy Daoud, private wealth advisor at Ameriprise Financial and CEO of Opus. Right. If you're investing for the long term, how do you manage all the interim volatility? Plus, we'll catch up with what's going on in the White House. Apparently, there was a talk between President Trump and President Xi, according to Chinese reports. So we will discuss the latest on that. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Right now, the major stock averages, they are pushing lower. You initially had that bout of optimism when we got word of the phone call between President Xi of China and President Trump. No details on that, at least so far. Stocks, again, pushing lower right now. The S&P 500, 9 points lower. That's down about 0.2%, 59.61 on the index. The Dow Jones Industrial Average, 101 points lower. That's down 0.25%. The NASDAQ 100, 10 points lower right now. Some of the earnings just got Brown-Forman, owner of Jack Daniels, falling the most in 15 years. Results trailed expectations. They also projected a sales decline in the current fiscal year. Brown-Forman right now down over 15%. And after the close of regular trading today, we're going to hear from Broadcom. They're expected to report strong second quarter earnings driven by heavy spending on AI gear, with a focus on its revenue forecast and potential new cloud computing customers. By the way, that stock, the valuation, that has ballooned. 35 times projected earnings they're trading at over the next 12 months. Ahead of the earnings, they've just moved higher. Broadcom shares up about 0.2%. You see this one? Sotheby's going to auction the original Hermes Birkin bag that once belonged to the late singer Jane Birkin, one of the most coveted designs in the fashion industry.
So price tag?
Well, it's an auction. It's a black leather handbag put up for sale in Paris on July 10th.
Get your bids.
Well, let me just put this in perspective. The record for a bag sold at auction is held by an Hermes Kelly, known as Himalaya, made in crocodile skin and carrying a diamond. That fetched $510,000. It was auctioned off by Christie's in 2021.
All right.
Apparently, these things like sell more for on the secondary market than they do in the stores because they're so hard to get.
Yes, 100%. And Birkins are, I mean, to be fair, I don't understand the point of the Birkin bag. I'm just going to put that out there. But, they can retail, like if you get crocodile and stuff like that, I mean, we're talking like hundreds of thousands of dollars. And the retail market, like you just said, is huge.
Do they have to hurt the crocodile to make the bag?
I'm thinking yes, because I'm thinking it doesn't come with the crocodile.
Yeah.
At the end of the day. All right. Thank you so much. We appreciate that. John Tucker joining us. All right, Alex Steele, Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. So early reports this morning from the Chinese press say that President Trump and President Xi held a call as they're still dealing with things like trade and technology, steel and aluminum tariffs, and all the like. So we wanted to get the latest reporting on this with Hadriana Loenkron. She joins us now from D.C. as a White House reporter. Okay, so did they actually hold a call, and what was discussed?
So we are still waiting to hear back from more confirmation from the White House, but that is something that we are understanding from the side of China. We know that the president has been wanting that for some time, believing that really the two leaders need to sit down and not just sort of their delegations, their senior officials, which we know had been happening. We had the Treasury Secretary, and there were talks when dealing with China on trade. Now this would, of course, mark a huge step, as the call before this would have been, the known call would have been, before the inauguration. So this definitely marks a big step, and we are waiting more details, and we will get them to you as soon as we can.
And Hadriana, I think the biggest mystery to me, it's important that they spoke, if they did in fact speak, because it would be the first time as President Trump is actually president. How come he's not out in front breaking this news? That's usually his style. To me, one of the most surprising things is we haven't yet heard from President or the administration. What are you making of that?
Yeah, that's a great question, and that could be why, I mean, we're so used to finding the news out via his Truth Social post. We haven't yet seen a post, so, that is a great question as to, who is kind of holding what narrative. We know that on the side of China that they had actually indicated that President Trump had initiated the call, so there's some interesting things going on there in terms of, which narrative do we want to have, who started it, who reached out first. So, now we're waiting to hear, how President Trump describes it, and of course, hoping for as much detail as possible as to, what they talked about and really what that means going forward when it comes to trade. Of course, we have spoken on our side, sources have been telling us, that there are a number of countries on the table. Officials have been coming out publicly as well. Some are saying India, and there's been some talk about the EU. But for all of them, China is really, really important, and so this could really be the next step in figuring out what comes next with regard to trade between the two countries.
What are the sticking points? I mean, there are a lot, but what's the main sticking point at this time?
Right. I mean, there's, as you mentioned, so many things. There's a lot with minerals. That's something that we are still trying to get a little bit more info out of. Some things that there have been more kind of hostile relations just in the past few days, of course, with what's been going on with the president in terms of his immigration agenda. Most recently, putting out this statement that foreign students, from China being one of the groups impacted with regard to this student visa ban. As you know, on the immigration front, which is where the focus of most of my reporting, there has really been kind of a ramping up on the kind of education front. Of course, Harvard taking being the main kind of target from the president and really trying to bring back or kind of restrict the number of foreign students coming in as we see a rise in these instances tied to anti-Semitism. And of course now last night, we have this travel ban, which has an additional dozen or so countries on it. And that, again, is really the kind of latest step in terms of the president's immigration agenda.
Adriana, thank you so much. We appreciated that. Adriana Lowenkron, White House reporter for Bloomberg News. We will look for some confirmation from the White House on whether the President Trump and President Xi did in fact hold that call. And we get that, we will bring that to you. Let's get back to these markets here. We want to check in with Nancy Daoud, private wealth advisor, Ameriprise Financial. It's interesting, Nancy, we've had almost a full retracement in the S&P 500 from the sell-off earlier this year, due in part to some of the rollouts of those tariffs. What's the conversation like with your clients today? Are they just kind of whipsawed? What do they want to talk about?
Well, it really is the realization, or maybe I should put it more like it's a desensitization at this point, because at first when on Liberation Day, when everything was rolled out, it was a shock to the system. There's a very big change here, and human behavior doesn't respond well to change. Even when we know it's a good thing, but we don't really know if it's a good or a bad thing at this point, but it's still a change. And at this point, because the pattern has become somewhat predictable, where there's something crazy that happens or a very big announcement that turns the world upside down, usually through social media, then there's a pullback with a negotiation period, which allows investors or the market to breathe a little bit. And then there's the actual negotiation. So it's kind of like the Trump tariffs three-step process that has now almost become predictable. So investors are feeling a little more comfortable with it. And of course, it doesn't hurt that the S&P is back almost up to its all-time highs again.
Well, to that point, actually, Charlie McGillicott over at Nomura had a really interesting quote. He said something along the lines of, like, if you had bought buy the dip, betting against the S&P futures every time President Donald Trump escalated trade rhetoric and then buying them back 5 days later would have yielded you 12% versus flat for the broader S&P since the beginning of February. Like, to your exact point. Okay, so what do you do to avoid all the noise? What's the best strategy?
Just stick to your plan, stick to your investment process because the data is ultimately what rules, not the narrative, not the, all of the noise that we hear every day. I think it's almost clear now that this is all going to settle down eventually, not in the near term, but longer term. I think it's going to spell growth. I mean, it's clear that President Trump is rewriting the rules of global trade, and we just need to get used to that and work around it. The tech sector, energy, small caps are making a comeback. I mean, even international has actually been very positive. So the data is the data, and GDP is up. The Q1 earnings were stellar. Inflation is down. In fact, we are almost at the target of what the Fed was targeting. And they weren't even expecting to reach that 2% until mid next year, 2026. The jobs, we don't know what the report will say tomorrow, but it looks pretty solid. And the consumer balance sheets and spending is still pretty solid. So that's the data.
Yeah, and Nancy, it's interesting that Alex and I just spent the past couple of days at a wealth manager conference, and I think we were both surprised that when we talk about portfolios, alternatives make up a much bigger part than maybe we had originally thought. How do you position alternative investments, whether it's private equity, private credit, hedge funds, that kind of thing, for your clients?
Well, alternatives absolutely have a place in every portfolio to the tune of at least 10 to 20%, depending on the portfolio and the risk involved. And the most important reason is because alternatives, by definition, are not correlated to stocks and bonds. So when all hell breaks loose, so to speak, those will prevail, hopefully. So it definitely has a place in everybody's portfolio, but it just depends on the time frame of the investment and the appetite for risk of the investor.
What do you think about, say, gold, for example, right? Like, it's not a typical alternative, right? But it has been a real stalwart in this environment. Do you think, are you recommending clients to sort of increase that exposure?
Not necessarily gold specifically, but in general, commodities, there's a small amount of percentage of each portfolio that should have some commodities, again, just as a hedge, but not specifically gold.
All right, Nancy. All right, Nancy, thank you so much for joining us. Really appreciate it. Nancy Daoud, Private Wealth Advisor for Ameriprise Financial. And again, I just kind of go back to what we learned over the last couple of days at PNC. These people are talking about derivative alternative investments in a pretty big way.
Oh my gosh, yeah. Remember there was someone that said 50% was like some allocation? I was like, oh my gosh, for some of the big guys.
Well, I was shocked when I first got down to the Duke board to find out how much is allocated there. And that's kind of the Yale model where they go 50%, something like that. I was like, really?
I mean, you just have to then think, like, are the risks well known? Like, are you knowledgeably exchanging liquidity for yield? And if that's the case, then that's great, right? I mean, as long as everyone is on the same page, is understanding what you're giving up and what you're getting at the same time. Here's what I'm going to be getting. I'm going to be getting a conversation in power. Oh, yes. We heard the Meta and Constellation Energy deal the other day. That was a big deal for nuclear power. Meta Platforms also announced a deal today to get green credits from a U.S. solar energy project. We are going to talk to the company behind that project. The founder and CEO of Invenergy will be joining us, Michael Polsky, coming up next. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News, with this Bloomberg Business Flash. Right now, the major averages kind of mixed. The NASDAQ 100 just turned positive, up 25 points, up 0.1%. The S&P 500, 6 points lower. That's down 0.1%, 59.64 on the index. And the Dow is 69 points lower. So we're getting some headlines, a little more detail on that phone call between President Xi Jinping of China and President Trump this morning, which was initially reported by the Xinhua news agency. So here's the headline. Xi tells Trump U.S. should remove negative measures on China. Take that for what it's worth. Added attention on the non-farm payrolls report. That's out tomorrow morning after applications for U.S. unemployment benefits unexpectedly rose to the highest since October. That points to cooling. Initial claims increasing by 8,000 to 247,000. Multiple large companies, this includes Microsoft, Walt Disney, and Booz Allen Hamilton Holding, have recently said they're cutting jobs. Planet Labs, that is popping off the screen. A record jump this morning. The company's first quarter revenue topping expectations. Those shares right now, Planet Labs, 60% higher in this morning's trading. Kimberly-Clark forming a joint venture with a Brazilian pulp supplier. Kimberly-Clark selling a majority stake in their global Kleenex and tissue business. This is outside of North America. And starting today, this is one that gets my blood boiling. Customers across the country can order stuff from 1,500 Five Below stores through Uber Eats app and then have them delivered directly to. Now, the whole idea of going to Five Below is to save money on these little items, and then you pay Uber apps to have it
that's why you're
delivered.
spending the money, because you're then paying Uber apps.
I just want to. Let me just put it out there. If this happens at my house, I'm going to have a stroke, and you know who I'm talking to.
Yes.
Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube as well. So the news that came out on Tuesday was that Meta and Constellation Energy met what they call a virtual purchase power agreement. So it's basically an investment to secure clean energy from Constellation, but there are lots of different nuances to that. They're not the only one out there. Today we also learned that, back in December, Meta Platforms also announced a deal to buy green credits from 4 large U.S. solar energy projects. And the owner of that project joins us now. Michael Polsky is founder and CEO of Invenergy. And Invenergy is one of the biggest, largest independent power producers in the United States. Nat gas plants, solar, onshore, offshore wind, storage, as well as transmission. Really has his pulse on the market right now. Good to see you, Michael. Thanks for coming in.
Thank you. And we have to add natural gas as well.
Yes, no, I said that. I said natural gas. I did. Plants. So you have all that clean stuff. How hard is it to reach these agreements with the hyperscalers right now? What are those conversations like?
Obviously, these are large-scale agreements, so it's not easy to just walk in and these are those big deals. So, first of all, we have to make sure that both sides, so that we agree on that, suppliers have sufficient supplies and satisfy buyer requirements. Is what is also important that certain reliability standards are being met, and most importantly, the pricing has to be appropriate for a buyer to agree to buy this.
Another headline crossing the Bloomberg terminal. President Xi, President Trump agreed to start new round of talks ASAP. That's according to CCTV. We'll bring you continued reporting on that. Michael, is the Trump administration making your business, the development of your business, the expansion of your business easier, more difficult, no real impact yet? What have you seen?
Clearly, the administration sent very right sign. President announced energy emergency, which I believe there is an energy emergency because we have to build, there is increased demand and we have to build more supplies, and more supplies we have to build. If we build like we used to do it, it would take too long. So it's really an emergency. So we try to, in energy, we try to build as much supply as possible. What is also very important, not just supply, but transmission. I mean, one of our biggest developments right now, and what we believe is critical to meet sort of this emergency, is to build more transmission lines. I always like to say that, if we build more trucks without roads, we're not going to deliver goods. So in order for electrons to move, we need transmission lines. And if we have transmission, then we can shorten time to interconnect a facility. We have to be able to move power from where it's produced to where it's used. And I think we can really build infrastructure a lot faster here and with a lot more impact.
Devine, to your point, Goldman Sachs had a note out today talking about how power is already tight in the Northeast. There was a report out yesterday that said the development of data centers to the largest U.S. grid and PJM is raising costs by almost $10 billion because we just can't build it out fast enough. What's the biggest hurdle to reimagining transmission?
I think there are multiple. One is obviously permitting, because it takes forever permit, and
supposedly that's all going to be fixed now. Has that all been fixed?
I mean, it's in the process. Obviously, there are good announcements. We have to see, as a business, we have to see how it's going to be implemented, because implementation is very important. But it's not just permitting. I think transmission has to be appropriately paid for. And right now, particularly for long-distance transmission, we don't have a methodology in this country how to pay for transmission. So there's a lot of, intention to build, and the only really transmission being built, the one that recovered by utilities or RTOs through the ratepayer. The moment you touch something that is not typical and normal, then it's very difficult. So we have to really come up with appropriate methodology to value transmission and allocate the cost of transmission. I think, in my opinion, for this administration, for Department of Energy, that should be really one of the most important tests to build our infrastructure.
I did read the book.
Here it is.
I did read the book, The Grid. So it took me a whole summer to get through it, and it was not an easy read, but I think I have some understanding of it. What's your sense overall of the power grid in the United States? How good is it? How bad is it? How much investment does it need?
Obviously, there are a lot of discussions about grid right now. The world being used like antiquated, old, not reliable, which is true in many ways, because most of our grid has been built 30, 40 years ago. And there are a lot of change since then. I mean, for example, we used to have very centralized way of generating electricity from very large coal, nuclear, sometimes gas power plants. Now we have a lot more decentralized generation, number one. Another issue is that our weather pattern has changed. I mean, now we have a lot more, inclement weather. We have ice storms, which we've seen in Texas. We have floods. We have other weather events, which shows that generation itself is susceptible. We cannot make 100% sort of guaranteed generation. So how to deal with this? We have to connect, I like to call, larger geography. So power can move from here to there, just like roads, right? If we only go from here to there on one road, and that something happened with that road, and we cannot avoid that, then all the traffic will be stopped for days. We can't avoid this. So we have to have transmission. But
based on that, you said the sort of financing this transmission is key. How would that work? I get it for the regulated utilities, but if you wanted a transmission line across multiple states, how could the financing work to make sense for an independent player like you?
This is a fundamental problem here, right? We in the United States, we talk about the reliability, we talk about national security, but for example, we develop in large transmission line, and which dramatically increase reliability. But then you go to the RTOs like MISO and ask them to value reliability, and they just don't value this because neither they know how to do it or they simply don't want to do it. So this is a fundamental problem that, when you build transmission, for example, in our case, Grain Belt Express, it's $11 billion project. We have to have revenues in order to finance this. And if nobody wants to pay for anything, it's really hard. So I think it should be a priority for the government to really established revenue streams for transmission.
Well, it was really great to get this perspective. I love this conversation. Please come back. Michael Polsky is founder and CEO of Invenergy, joining us on the issues of power here in the United States. Coming up, we're going to get more information on this Xi and Trump call for you. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney live here on the Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Here's an interesting story out on the Bloomberg terminal talking about Bill Ackman. The Wall Street billionaire remade himself into a very online, Trump-loving culture warrior. Now he wants to be the next Warren Buffett. The author of the story, Annie Massett, joins us, Wall Street reporter for Bloomberg News. We have seen a kind of a metamorphosis for Mr. Ackman from, kind of your run-of-the-mill, mega hedge fund, mega rich hedge fund folk to now he's all over social media, taking strong political positions. What's he trying to do you think?
Yeah, so, I mean, those on Wall Street probably have known a lot about Bill Ackman and his trials and tribulations and successes for many years now, but I think he really kind of exploded into public view last year in what was really the first tremors and what became a huge war with Harvard. And he was a big voice, of course, in kind of attacking Harvard for its handling of campus protests and the plagiarism debacle over the then president, Claudine Gay. So he waged a lot of that kind of activist-like battle out in public on Twitter and gained this really large following that's kept growing over time. So that was the beginning of it, and then he kind of transformed over the past year plus into a vocal critic a vocal advocate of Donald Trump.
Is it affecting his investors at all?
That's a great question. So he has this. While he's been undergoing this transformation, he has this big goal that he's working towards, and as he'll tell you, his investing idol, investing hero, is Warren Buffett. He's not alone in that, perhaps, but he sits apart because he's really trying to almost emulate in some ways what Warren Buffett built in Berkshire Hathaway. So in the past year, he had this big fund that he tried to launch last year that didn't get off the ground. And now this year he's come back with an idea to kind of a step toward his goal, another step towards his goal of becoming more like Warren Buffett and having an entity that's more like Berkshire Hathaway. He's really after permanent capital that's insulated from the whims of investors putting money in or pulling it out as they would in a hedge fund. And he's kind of pursuing this like Berkshire-like format for his own business, Pershing Square, by taking a big stake in this company called Howard Hughes. And he's trying to build a similar vehicle for taking over other companies as Warren Buffett did.
Does Mr. Ackman have any political aspirations himself?
That's a great question. I mean, as with anyone who has a very large public platform, it's hard to say, but he's certainly weighing in on a lot of the big political and economic hot button topics of the day. One of the most visible was in Liberation Day, when he was one of the first to come out really strongly and say, President Trump, you should put these big reciprocal tariffs on pause, which wound up happening. So he's definitely not shy about weighing in on those types of topics.
That's what's so interesting, because Warren Buffett was exactly the opposite. Like, he was investing in companies that we all relate to and stuff that we eat, use, and buy every day. This is not Ackman's MO. So it's just so interesting that he also wants to think about the way that Buffett invested, yet nothing he kind of operates or does is Buffett-like.
Right. His public persona is probably very, very different than Buffett's. Buffett, especially on the political front, pretty much has been dark for the past decade or so. Whereas Ackman has seemed to relish becoming much more overtly political, especially in the past year.
Yeah, remember that Herbalife thing?
Yes. Yeah,
oh my gosh.
He said some big winners, but also some big losers here. Do we know what his, relationship is with President Trump at this time?
We asked him. We asked him something along the lines of, "Have you shared any of your thoughts directly with the administration?" And his response was basically, "If I have a thought on something, I'm going to put it out there." But in the case, for example, of tariffs, what ended up happening, the 90-day pause, was remarkably similar to the idea that he had had.
Just a few days earlier, I remember.
That's
and
right.
then Jamie Dimon sort of underscored it that morning.
Yes.
And then we kind of saw.
So it's hard to say for sure, but we didn't get a direct answer on that.
So what's next? Like, where does kind of Bill Ackman go from here over the next, say, decade? Like, what do you think he's going to do?
So you mentioned Herbalife. He underwent this other transformation, which was he stepped back from shorting companies, doing these big public shorts, and how he kind of refers to it now when he's against a company but not like putting money on the line. He'll say that he has these like psychological shorts. So I mean, what it looks like is that he's going to pursue this new path for Pershing Square and try to follow in Buffett's footsteps that way. But I mean, based on the past, past year and a half, it seems like he's really stepping into this more. He was always out there, and he was always kind of in your face in the financial news media, and I think that he's really brought that to another audience as well in the past year and a half.
Yeah, interesting. It's fascinating to watch him because he has very strong opinions. I would say informed opinions on the most part. And he's not afraid to share them these days, which is different for somebody in that position. Annie Massa, thank you so much for joining us. Annie Massa, wealth reporter for Bloomberg News. Again, talking about Bill Ackman and now how he has remade himself into a very online, Trump-loving culture warrior. So there you go, Bill Ackman.
For our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned. The second hour of Bloomberg Intelligence.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Happy Thursday, Friday Eve. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great show lined up for you. We're going to get the latest from D.C. on what's happening. And after that phone call between President Trump and President Xi, President Trump putting a post on Truth Social. So is that like truth socializing? Like what's the verb for that?
I'm not sure.
Yeah, we're not sure. Okay, anyway,
Posting.
Concluded a very good phone call with President Xi. We'll get the latest from you. From that, we'll also go to D.C. with Nathan Dean, Bloomberg Intelligence, senior Washington analyst, and just take down kind of where the policy is, where the big, beautiful bill is as well. Ann Milletti will then join us from Allspring Global Investments for her take on the market. And then Teresa Condor, Spire Global CEO, going to break down how AI and satellite data are helping us understand weather forecasting. Huge.
Yep.
So fun, so huge. Really excited to kick that off. But let's get you a business flash here with Charlie Pellet.
All right, thank you very much, Alex and Paul. Here's what's going on. We have got stocks advancing now. This Bloomberg Business Flash brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. An update right now for the Dow, the S&P, NASDAQ. You run the GIP screen on the S&P 500 index. You can see the turnaround. All about trade, all about the headlines. We got a bounce in stocks after that confirmation of a conversation between President Trump and Xi Jinping. Stay with Bloomberg for the latest on any and all trade headlines. Right to the numbers with the S&P 500 index up 14 now, 59.85 where we stand. That is a gain right there of 0.2%. The Dow up 62, up by 0.1%. NASDAQ up 89, higher by 0.5%. Our Mag 7 index up now by 0.2%, with the 10-year 4.38%, the 2-year 3.90%. Gold now down 0.1%, 33.68 the ounce, and West Texas Intermediate crude up 1.5%, 63.76 for a barrel of WTI. Patrick Fruzetti is portfolio manager at Rose Advisors, and on surveillance this morning he told us you cannot overlook the market gains in recent weeks.
Do you know in the last 40 trading days, we're now up around 18% off the lows? If you look at the top returns of the best, post 40 days after low, this is one of the top 10 in modern times.
Patrick Fruzetti of Rose Advisors interviewed this morning on surveillance. Procter & Gamble plans to slash as many as 7,000 office jobs over the next 2 years. Procter & Gamble down 1.3%. Citigroup cutting its tech employee workforce in China by about 3,500. Citigroup up now by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Let's take a look at some stocks on the move today. I'm Paul Sweeney with Alex Steele, and we're joined by Bloomberg's Isabel Lee. Isabel, what do you got?
I'm looking at Chewy, ticker CHWY. So shares are flat now, around 0.9%. It was down pre-market, but I guess that they paired some of those losses. So we have Jefferies cutting the recommendation to hold. Jefferies said that valuation appears prime for a first quarter beat and that a raise is unlikely to happen. They also said that the pet macro looks relatively stable and Chewy's performing well, but the CFO change underway is a little concerning. So in May, recall that Chewy announced that its CFO, David Reeder, will depart in several months, and as he really comes to lead a semiconductor company called and Tigris. So some of the Wall Streets were really disappointed that he left. So this is one of those examples that, you're sad to see a leader go.
True, but aren't we like whole invest in your face and invest in your pets? Like, aren't those the two things?
That's what I thought.
I'm about to learn that.
Oh, he's getting a puppy.
Really?
Oh my
First
God.
pet in my entire life.
What breed?
Australian Labradoodle.
Oh
I
my
mean,
gosh.
the pictures of the
Very
puppy
cute.
is like to die for. Okay, Dollar Tree.
Dollar Tree. So ticker is DLTR. Shares are rising more than 7%, and that's after JP Morgan upgraded the stock to overweight. So the move comes again in the wake of the company's results when it warned about the impacts of tariffs. We have JP Morgan analysts saying it sees a lot of positives in the results. So Dollar Tree shouldn't be confused with Dollar General. We have Dollar Tree warning investors that its second quarter profit could be down as much as 50% this year. And that's in contrast to Dollar General, which reported really good earnings. So Dollar General generates around 80% of its sales from food and consumer goods, but Dollar Tree gets just half of its revenue from those categories. Anyway, it was just interesting to me that these two dollar stores really have this huge disparity, and it just makes you realize that there's really a lot under the hood when it comes to these companies.
And rounding it out, Planet Labs.
This one, the ticker is PL. I had to take a double
What
look.
is Planet Labs again?
It's an Earth imaging company.
Okay.
And I had to take a double look because shares are up almost 60%. That's a record jump. So company's first revenue quarter topped expectations. We have Citizens analysts saying that the company had a stellar quarter and the stock remains an opportunity for long-term capital appreciation. So it's interesting because this comes as Europe hikes defense spending in response to a pullback from the U.S. And we have the CEO, Will Marshall, saying that European demand for satellite data is higher now than it was during the onset of the Ukraine war. So with the change dynamics in the U.S., the CEO said that they're trying to pick up more of that capability themselves. So good for them because they're going to be producing probably a lot of imaging. Their earnings, including some items, were $1.2 million this quarter. And that's after analysts were expecting a $3 million loss. So,
All right. Thank you so much. Really appreciate that. Isabel Lee joining us from Bloomberg News. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports and the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. And also Deep Tease, the Spire Global CEO, will be joining us. They provide space-based data and analytics and space services, and they also take a look at Earth and oceans and atmosphere to help companies make data-driven decisions. So we'll kind of stay within that realm. We also want to figure out what's happening in D.C. You had a social media post from President Trump talking about his readout from the President Xi and President Trump's call. Maybe I didn't say that right, but anyway, he talked about the call that they had together. Tyler Kendall is joining us outside the White House. What did he say? What do we know?
Yeah, hey, Alex. Well, President Trump said that the call lasted a little over an hour and a half and said that it resulted in a, quote, positive conclusion for both countries. Importantly, he said that moving forward, he doesn't think there's going to be any questions around rare earth products. As you all know, the U.S. had been accusing China of slow-walking these export licenses when it comes to critical and rare earth minerals that really are essential to U.S. supply chains, alleging that China had violated the terms reached when they had negotiated in Geneva. In fact, I actually caught up with the Deputy Treasury Secretary Michael Falkender earlier this week, who told me that this was the issue that he thought would ultimately mean that these leaders were eventually going to have to get on the phone and talk about. President Trump also said that there would be another round of in-person talks like we saw in Geneva. He said that Treasury Secretary Scott Bessent and USTR Jamieson Greer would lead them, as well as Commerce Secretary Howard Lutnick. That would be a new addition to the team. He was not there at the talks in Geneva, but a pretty remarkable development to think about how our reporting has really indicated, Paul and Alex, that China would really much prefer for key advisors to iron out the issues before putting Xi Jinping on the phone call, and there were definitely some key issues that they needed to talk about today.
But as it relates to those rare earths, the U.S. president did not specify whether Beijing had agreed to speed export licenses, did he? Is that something that's just too complex at this point?
So we're still awaiting further details. We have to put into context that the Truth Social post was rather vague, but President Trump himself said that he doesn't think that there are going to be questions moving forward here. Of course, it's a very complex process and has been something that has been top of mind for the United States during these talks and really has become sort of a pressure point moving forward, since we know our analysts at Bloomberg Economics tell us that 30 out of 50 minerals that are deemed critical to the U.S. come primarily from China. So they really do have such a big market share when it comes to these critical minerals that the U.S. ends up relying on.
All right, very good. We appreciate that. We're just getting some more reporting there from Washington, D.C. as it relates to some of those talks, which I guess are inconclusive, but I guess it's just good news that
I think
they're
just the fact
talking.
that they literally are talking.
Yes.
It's probably a good thing.
Right.
Yeah. All right, Tyler, thanks a lot. Tyler Kendall, Bloomberg Television Washington correspondent, joining us on that call. Well, House Speaker Mike Johnson earlier joined Bloomberg to discuss key issues such as Elon Musk's vocal disagreement with the big beautiful bill and the Speaker Johnson's fight to keep the $40,000 SALT cap and more. Bloomberg asked about the SALT cap that he's fighting to maintain. Here's part of that conversation.
I am crossing the Grand Canyon on a piece of dental floss, okay? The equilibrium that we reached here took quite a bit of time to get to where we are, and you can't load me up on either side. And if you go and slash the SALT cap that we negotiated carefully for over a year, it's going to make it very difficult for me to deliver the necessary number of votes.
All right, that was House Speaker Mike Johnson speaking with Bloomberg earlier. We're going to get the latest on this big, beautiful tax bill that, again, passed in the House, is now being negotiated in the Senate. A couple of sticking points, including that SALT thing. I thought that was just a Matt Miller issue, but apparently it's a big deal for a lot of senators and a lot of representatives. Nathan Dean joins us, senior policy analyst for Bloomberg Intelligence. Nathan, what are the outstanding issues that you believe the Senate is grappling with now, and do you expect them to be resolved?
So, I think the two big issues that are actually going on at the moment in the Senate is on the deficit reduction side, this idea of, is it going to increase the deficit? And as a result, are the Elon Musks and for those members in the Senate, Senator Mike Lee and Senator Rand Paul and Senator Ron Johnson, are they going to continue to push for a bill that ultimately tries to decrease the deficit, aka, probably not put out as much in terms of permanent tax cuts? The other thing going on is, on the how to pay for it is the Medicaid work requirements, because those moderates in the Senate, think of Senator Collins and Senator Murkowski, are essentially trying to push back some of what the House has already done. Now, when you have two polarizing forces trying to push the bill in a different direction, sort of challenging for Senator John Thune here. So I think what happens is you will see these negotiations continue to play out over the next week, maybe the next week and a half or 2 weeks, and then you'll get a clear picture of where the Senate's going to go. But this bill does have to change in order to get enough senators to pass over and support it in approval.
Okay, so what does SALT really look like? What, is it going to be 40,000? Is it going to be lower, or what we think?
So I think it's going to be either 40,000 or slightly lower than that, because I think what's going to happen here is, look, if I'm Representative Lawler, I really enjoyed that interview this morning with Speaker Johnson, because he defended the cap and said, look, we negotiated this and it took a year. And the SALT caucus in the House does have a lot of power. They can say, look, we're just not going to vote for it. If you want to throw it back down to 10,000 Senate, feel free. I'm not going to vote for it, and it's not going to pass. But this idea of it's either going to be 40,000 or maybe slightly lower, because then the SALT caucus is in slightly more difficult position, because they did get something out of it. So for those of you in New York and New Jersey, I think you're going to get something. It's going to be around 40,000 or maybe just slightly under that.
Nathan, you mentioned Elon Musk. He has come out really harshly against this bill and on other topics. How much influence does he have now that he's no longer technically part of the Washington story?
So this is one of those things where it's starting to brew into an issue. I don't think it's an issue just yet. I mean, if you looked at Speaker Johnson's interview, he defended what they have been doing, and there's a lot of criticism on the congressional, the CBO at the moment in terms of that $2.4 trillion estimate of increasing the deficit. So if you ask the politicians up on Capitol Hill, I wouldn't say that there's really much there yet, but it could be coming, because like Elon Musk said on X yesterday, he's calling for individuals to call their senator and call their congressman and say, let's not support this. And there is a little bit of a group coming together. Senator Rand Paul, Mike Lee, Ron Johnson, that's enough votes that potentially could derail this bill. So if I'm Senator John Thune, I have to figure out how to get some of those individuals on board. And the answer is, well, maybe these tax cuts are permanent. Maybe they're just extended a certain amount of time. Or maybe this bill shrinks. Or maybe the debt ceiling goes from a $5 trillion increase to a $2 trillion increase. There's areas of flexibility here for leadership, and I think we're going to see that play out over the next few weeks. So we still think this bill is going to increase the deficit, but stay tuned, because it may not be what the CBO just scored yesterday.
I think I asked you this before, but this is obviously what I'm interested in, and that's what happens to a lot of the energy tax credits, the ITC, from the IRA. And all the companies are kind of waiting on tenterhooks for what is going to happen. What's the indication that Republican senators are going to step up and try and fight for these tax credits?
So we've heard through the grapevine that, there are a lot of lobbyists up on Capitol Hill right now really pushing for this, and there are some receptive ears. Senator Tom Tillis from North Carolina is one of those individuals who's really focused on this. Now, I think you're going to start seeing snippets of what the Senate is thinking towards the end of this week, maybe the beginning of next week in terms of those tax credits. And we're telling our clients that, look, the House tax credits were somewhat positive and then initially negative on the solar industry in particular, and I think you are going to see some moderate voices coming through when it comes to the Inflation Reduction Act. Because at the end of the day, it's going to be very difficult for some of these Republicans, say Senator Tom Tillis, for example, that will vote to gut the Inflation Reduction Act when the Inflation Reduction Act is bringing jobs and plants and other types of economic growth to their states. So I do think you're going to see a moderation of what the House did, and I think we'll see some of those details coming out early next week.
Got a red headline crossing the Bloomberg terminal. NATO adopts military buildup plans as part of new spending goals. So we'll have some more reporting on that. So some movement there across the pond. Nathan, President Trump quite successfully kind of worked the phones in the House to get passage of the deal. It's a little bit different in the Senate where, these folks have 6-year terms here. What's the expectation of what kind of influence President Trump can play in this negotiation in the Senate?
Well, you hit it right on the head. I mean, obviously with the House of Representatives, they run every 2 years, and so the idea of a primary threat is much more serious to them. But when it comes to the Senate, I will say is that their primary goal is to make sure that the tax the tax increases don't happen by the end of the year. Senators know they have to pass something. The question on the Senate side is that what else are we going to do with this? So I think that President Trump will have to take a different type of approach in working with the Senate. One of those things like, look, this is America First policy. And even though only 1/3 of the Senate will be running approximately next year, the Republicans do want to remain control of both the House and the Senate, and failure to adopt something like that could put that at risk. So I do think President Trump will have a little bit more hands-on approach with the Senate. Obviously, he's going to have to manage both those who want to see the deficit decreased, along with the moderates who want to see how these pay-fors decreased. And I think they will be able to come up with a solution. It's just going to take a lot more work, and he's going to have to roll up his sleeves to do it.
All right, Nathan, really appreciate it. Thank you very much. Nathan Dean joins us from Bloomberg Intelligence. He covers all of policy there for Bloomberg Intelligence, that senior policy analyst.
When we were down in D.C., I did have a little free time. You were working.
I was working.
We went to Lincoln Memorial and the Vietnam Memorial, all the cool stuff. I had no even thought of coming. I'm going to go to Capitol Hill and see my representatives.
Oh, God, no.
So I got much more inspiration
Absolutely
from going to
not.
the Lincoln Memorial. But you go to Lincoln Memorial, you read the Gettysburg Address, and then you read his speech for the second inauguration. It just takes your breath away.
It really does.
It's just amazing.
You get that feeling in your stomach in like a good way. Yeah, I totally remember that as well. All right, coming up, we're going to break down the markets with Ann Maletti, Head of Equity Investments and Chief Diversity Officer at Allspring Global Investments. And then Teresa Condor, Aspire Global CEO, will be joining us how AI and satellite data can help redefine weather forecasting. This is sort of the new area. Low orbit Earth is where sort of the real build out and growth is for that satellite technology. As we take a look at a market that is a little bit higher, up 0.6% for the NASDAQ. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks trading at the best level of the day right now, with the Dow, the S&P, NASDAQ all advancing. President Trump and Chinese President Xi Jinping have agreed to further trade talks. They have also cleared up disputes surrounding rare earth exports. The two leaders discussed trade in a phone conversation. President Trump saying, quote, "It was very good," and Xi urging Trump to remove negative measures that have roiled trade. So right now we have got the Dow, the S&P, and NASDAQ all advancing. S&P, as I mentioned, best level of the day. Right now, the S&P, by the way, at 59.95. A gain now of 0.4%, up 24 points. The Dow up 123, up 0.3%. NASDAQ up 0.7%. Our Mag 7 index up now by 0.5%. 10-year at 4.38%, with the 2-year 3.90%. Gold, a little change now, down $8 the ounce, 33.64, down by about 0.2%. West Texas Intermediate crude up 1% now, 63.49 a barrel on WTI. We'll have a whole lot more on the markets coming up in just a moment with Ann Maletti of Allspring Global. Kimberly Clark is forming a joint venture with Suzano that it will see sell a majority stake in its global Kleenex and tissue businesses outside of North America to the Brazilian pulp supplier. Kimberly Clark shares down right now by 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate it. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. You can also catch us on your smart TV. Search Bloomberg Originals, and that's where you'll find us. I mean, S&P 500, it's pretty much unchanged. It's actually up a little bit on the year. If you just kind of fall asleep over the last few months, you're like, what happened? I mean, but the question is, where do you go from here? Ann Maletti, Head of Equity Investments and Chief Diversity Officer for Allspring Global Investments, joined us. She was here in studio yesterday when I wasn't here. Matt Miller sent me a picture.
Doesn't like you as much, I think.
Matt Miller just sent me a picture and says, jealous? I said, yes. So anyway, Ann joins us today.
True.
We appreciate that. Hey, Ann, what do you tell your clients here? I mean, again, they've been whipsawed this year. I guess if you just stayed steady, you'd be okay.
Yeah, you know, Paul, the way you introed was so important, right? Like if you would have just been napping on the Jersey Shore, you wouldn't have missed a thing. But living through this, there's been a lot of uncertainty. We've gone from extreme pessimism about 6 weeks ago to pretty much optimism up until yesterday. And so it's interesting. One of the things that we always tell investors is it's important to stay invested. History shows that equity returns can drive a lot of returns over a cycle. But what you do during downturns is also really important. So I'm looking at where investors can really find diversification and how can you stay active in an equity market that has a lot of uncertainty.
Right, and that's a great question. So how do you do that? It's like, and we were talking about this all over the last 2 days when we were at the BNY Insight 2025, right? It's like you have your long-term goals and you want that return, but then you also have to deal with headlines, but they're just headlines, yet they also could be structural. Like what if we have a structurally higher end 30-year, 10-year yield? What if we have a structurally weaker dollar? That does change how you allocate.
It does, Alex. And I think, you know, you hit the nail on the head. We are in a different environment than we had been over the last several years. Interest rates are different. There's a lot of policy uncertainty. The tax policy is also top of mind right now. We have higher inflation, higher rates. All of those things are different. And I think what that leads me to believe is that the equity markets and what works in the equity markets likely will change too. So we've had this, we've had this period of time where large cap worked very well. And not just large cap, but a very concentrated group of large cap names. And while we still see that working to a certain extent, if you go back to July, you have seen a broadening out of the market. And underneath those top 10 names, there's other things working in the market. And so what we're focused on is how you diversify. And so we're doing that both in market cap, really going down into that mid cap space and a little bit into small, although looking at companies in the small cap space that are well managed, have good cash flow, good balance sheets, all of that, can control their own destiny through uncertain times. But that mid cap space is really a sweet space now. I would also say there's certain sectors that have really underperformed, like healthcare. Yes, there's a lot of disruption, but there's a lot of innovation going on, and that also means new winners ahead. Also, M&A is starting to heat up there. I think we'll see more of that as well. And then lastly, a space that I'm not necessarily an expert at, but I work with some really great experts in the international and EM space. And with the weakness in the dollar, which is also a big shift that we've seen, it has created a tailwind for that EM and international space. So much more diversification is what we're telling investors than what they've seen over the last few years.
So, Ann, what's that mean for, kind of the big tech cap, which has just been driving this market higher for many, many years?
Yeah, it's a great question, Paul. And look, we're not negative on technology. We believe innovation is going to only speed up. You all talk a lot about AI and technology every day. It's not going away. But I think what happens in the first kind of cycle of any new innovation is technology leads, and then it kind of leads down into other companies who are going to use that innovation to become more productive. And so we believe in technology. We believe it's going to work. It's just that we want to move away from, actually diversify away from just those kind of concentrated group of names that have worked so good. And really fundamentally, it's because we also believe we're going to see earnings deceleration. Still good growth, but deceleration in earnings of some of those larger companies versus earnings acceleration as we move down cap.
Head of Equity Investment and Chief Diversity Officer at Allspring Global Investments. Thank you very much. We were mentioning earlier that one of the big movers in the equity market right now is Planet Labs. The stock up 55%. It had a quote-unquote stellar quarter. It's a satellite data provider, and the stock, according to analysts, is a good opportunity for long-term capital appreciation, which just brings us to the potential of satellite data providers. And we have a CEO of one company in the studio right now, and that is Spire Global. Teresa Condor is the CEO there. They are also a satellite data provider. So think of space-based data, analytics, space services, and that can be for the Earth, oceans, atmosphere, all to help organizations and companies make better decisions. It's great to see you in the studio. Thank you so much for joining us.
No, thank you. Thank you for having me.
So what is the broad potential for this kind of market? So I'm assuming the satellites go low Earth orbit, right? And that's how they get these really good reads, and the data goes back to customers.
That's right. The satellites are in low Earth orbit, and what is interesting about what we do, the satellites are very small, about the size of a loaf of bread.
Really?
Going around the Earth, very tiny, and they're packed with a bunch of different sensors. And those sensors collect, in our satellite's case, radio frequency information that then lets us help customers make better decisions about what to do. So some examples of things are a collection of atmospheric weather data that then goes into weather forecasting that allows companies, utility companies, for example, make better decisions about how they should protect their grid in the event of extreme weather, such as a hurricane. In other cases, you can use satellite surveillance data and tracking around the aviation sector and aircraft to help have better, efficient operations around airports and the movement of aircraft, and a whole host of other applications, including defense-related applications.
Who do you guys compete with?
So that's always a difficult question because we're present in multiple different markets, whether you think of weather and climate, you think of aviation, you think of space reconnaissance. And so we'll have certain different competitors in each of those spaces. Since you mentioned Planet Lab earlier, I'll have to say that Planet is not usually a company that is considered a competitor because they're taking pictures, they're doing imaging.
Interesting.
Versus what we do is this collection of electronic information and radio frequency data.
So you both send data to customers from your satellites, but the type of data and how you collect the data is then different.
Exactly, and the type of use cases and the relevance of it. So you'll have customers that want both types of data that are complementary.
What kind of stuff are you noticing right now? Like, what is some themes, some broad stuff that you're telling your customers?
So I think there's a lot of interest in defense and intelligence applications of satellites, and in particular, the type of RF type of technology that we have. Naturally, this comes out of the current geopolitical situation. You have a lot of stuff going on in the United States right now, and at the same time, really since February, you've had rest of world governments looking at increasing their defense budgets, having less expectation of reliance on the United States to defend them in terms of crisis. So there's a lot of interest in how the rest of world can develop their capabilities.
Do you have customers around the world, or is it domestic U.S.?
We do. We have customers around the world.
Is the U.S. government a customer?
The U.S. government is also a customer.
Are they the big one, the lion's share, or are you guys pretty diversified?
We're actually quite diversified, both between commercial company customers as well as government, and that can be civil agencies who buy our weather atmospheric data sets, and it can also be defense and intelligence, and that's U.S. and rest of world. So it's pretty well diversified.
Well, we've had companies ranging from McDonald's to, I don't know what, say AI is revolutionizing their business. How is AI impacting the satellite business?
So AI is also an important term and topic in the satellite sector. There's a couple of areas where we find it interesting. The first is in weather forecasting, where we're doing AI-based weather forecasting, specifically when we talk about sub-seasonal forecasts, so going 30, 45 days in the future, where normal forecasting models aren't usually very good. The other areas, or when it comes to satellites, are the processing of data and the ability to use AI to process them automatically and on orbit, so you don't have to download all the data sets, as well as in the operations of the constellation overall, because if you have many, many satellites in orbit in various orbital planes with lots of different sensors on them, having AI ability to manage that network is something quite interesting.
Sorry. I was going to say, you also had a contract with Space Force, right? Did I read that right?
Yeah, there is one that was just recently announced.
Space Force contract. How cool is that?
I know.
So how easy is it to come to deals with contracts? I would think that your services are highly needed right now as companies are trying to figure out where to build stuff, for example, or how to allocate their supply chains.
So I think demand is very strong right now for both satellite data sets as it relates to climate or to better understanding increased weather variability. And there is also increasing demand, what I mentioned, on the defense and the intelligence side, and in particular, as more and more countries look to how they build out their own sovereign capabilities. Yep. And this is where we have the strength in building both in Europe as well as in the United States.
Teresa, thank you for coming in. Really appreciate getting a few minutes of your time. Teresa Condor, CEO of Spire Global. It is a publicly traded company, SPIR. We appreciate Teresa coming into our Bloomberg Interactive Brokers studio. Looking at the markets here, we got the S&P up 25 points, the Dow up 133, NASDAQ up 136. That's 0.7%. We're starting to build a little momentum in the markets. 10-year Treasury yields up a little bit as well, 4.38%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all advancing right now, reversing earlier losses, as President Trump said he concluded a, quote, very good call with China's Xi Jinping. The Dow right now higher by 134 points, up 0.3%. S&P holding at the best level of the day, up 24 right now, up by 0.4%. S&P, by the way, just below 6,000 at 59.95. Nasdaq up 137, now up 0.7%. 10-year at 4.39%. The 2-year 3.90%. Gold is down $22 the ounce to $33.50. A drop there of 0.6%. West Texas Intermediate crude up 1%. 63.49 a barrel, and Bitcoin just about flat on the day, under 0.1%, 104,740. Ann Maletti is with Allspring Global. Moments ago, right here on Bloomberg Intelligence, she offered up this advice for investors.
One of the things that we always tell investors is it's important to stay invested. History shows that equity returns can drive a lot of returns over a cycle. But what you do during downturns is also really important. So I'm looking at where investors can really find diversification and how can you stay active in an equity market that has a lot of uncertainty.
Ann Maletti of Allspring Global. The communications equipment company Ciena is plunging after reporting adjusted EPS for the second quarter that came up shy of the average analyst estimate. Ciena right now down by 12.3%. Speaking of earnings, coming up after the close of trading today, we hear from Broadcom, up now by 1.3%. We'll also hear from Lululemon and Samsara. Lululemon up 0.7%. Samsara, ticker IoT, is an Internet of Things. That stock up now by 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in Midtown Manhattan. We're also streaming live on YouTube, so that's a cool thing, of course. Right now, I think literally any minute, German Chancellor Friedrich Merz will meet with U.S. President Donald Trump in Washington amid looming tariffs on German exports and tensions over Ukraine. Let's get some latest reporting there. Ben Stills, managing editor for European economy and government for Bloomberg News. He is in Frankfurt, Germany right now. Ben, what's the expectations for this meeting of the German and U.S. leader today?
That's a good question. I'm not sure there's an awful lot of upside for Merz in this meeting, and yet there is an awful lot of potential for things to go wrong. You've seen some of the recent encounters in the Oval Office. I think Ukraine's President Volodymyr Zelensky was the most conspicuous example, where he was effectively ambushed by Trump and particularly J.D. Vance. So I think the main ambition for Merz and his advisors to get through this unscathed, effectively.
Jeez. I mean, I just picture these European leaders or world leaders.
You're laughing.
kind of exchanging notes on kind of, how to get through a meeting with President Trump in the Oval Office. But the reality is, I mean, Germany's a huge...
that's true. It's actually true. Like, we had a story out yesterday that Merz has literally been exchanging notes with some of his European colleagues on how to get through this meeting. So yeah, they are like on whatever it is, like the world leaders WhatsApp group. Yep. They're exchanging experiences and telling each other, how to avoid getting an ambush.
Yeah, exactly. The reality is, Germany has some issues, some trade issues. They're obviously a big exporter with China and the rest of the world. What, from the German perspective, what are some of the key issues here as it relates to global trade?
Well, yeah, you're dead right. Germany had a record trade surplus with the US at the start of this year, and that really puts it in the crosshairs as far as Trump and his tariff hawks are concerned. The burning issue for them will be what happens to these punitive tariffs that Trump has imposed but suspended until July 9th. The trade negotiators on both sides, from the EU and the US, are trying to kind of find a settlement that to avoid those tariffs and what we would expect to be retaliatory measures from the EU kicking in on July 9th. That's not really a German competency, but what Merz can do is really help the mood music and help to create a more benevolent attitude in the White House towards the EU negotiators.
So, Ben, Ukraine is obviously a key issue, although it appears that the U.S. is trying to step back to a pretty meaningful degree. We've seen NATO step up their defense spending. Is the expectation that Germany is going to shoulder most of that, and are they prepared to do that?
Yeah, that's the basic idea. Merz's most dramatic policy move so far, since his election victory in February, has been to remove the constitutional limits on borrowing for everything related to defense and the military. That is part of his plan to get Germany's defense spending up towards 3.5% of GDP, with another 1.5% on related issues like infrastructure, perhaps cybersecurity. So Merz is really responding to Trump's demands to dramatically increase military spending. The issue for the Europeans is how quickly can they actually turn those policy commitments into tanks and air defense systems and fighter jets, and importantly, boots that are deployable on the ground, potentially in Ukraine and across the eastern frontier of NATO.
Ben, are the German people, by and large, behind such a policy here, that Germany will, in fact, be making significant investments in infrastructure and the military, and will very likely play a larger military role? Is the U.S. populace behind that? Is the German populace? Sorry,
I'm not sure that. I'm not sure that they are. I think that Merz has got a lot of work to do still to convince people on that score. He came in at the head of a very weak coalition. His signature policies on defense and on borrowing run counter to the instincts of lots of his own conservative lawmakers, and his initial confidence vote in the Bundestag, he actually lost, and they had the whips running around, rustling up votes before he got through on the second attempt. So we're going to
go to the president right now. Thank you very much, Ben Sills, managing editor for Bloomberg News in Frankfurt. Right now, let's go to Washington, D.C. Presidents Trump and President Merz from Germany are speaking.
So I'm very happy to be here again and to offer our close cooperation with the United States of America. We are having so much in common, our history. We owe the Americans a lot. We will never forget about that. And so with your German provenance, I think this is a very good basis for close cooperation between America and Germany. So again, thank you. Thank you for the hospitality, and thank you for having your guest house for a night. This is a great place. Great place. Many thanks for that. I really enjoyed it. Thank you.
It's a wonderful place. It's a landmark also. And Blair House is it's a nice place to stay. Good. Thank you very much for saying that. Would you have any questions, please?
Mr. President, on your new travel ban, why now? And if the Boulder attack was part of your reasoning, why not include Egypt on that list where the suspect is from?
Well, because Egypt has been a country that we deal with very closely. They have things under control. The countries that we have don't have things under control. And why now? I can say that it can't come soon enough, frankly. We want to keep bad people out of our country. The Biden administration allowed some horrendous people, and we're getting them out one by one, and we're not stopping until we get them out. We have thousands of murderers. I even hate to say this in front of the chancellor. Of course, you have a little problem, too, with some of the people that were allowed into your country. It's not your fault. It's not your fault. It shouldn't have happened. I told her it shouldn't have happened, what she did. But you have your own difficulty with that, and we do, and we're moving them out, and we're moving them out very strongly. but it can't come fast enough. We want to get them out. We want to get them out now. We don't want to have other bad people coming into our country. By using the word bad, I'm being nice. Okay,
the
question?
Democrats as a distraction, President.
You put out on Truth Social a post regarding your conversation with President Xi.
Right.
Can you talk about whether or not you feel that trade talks, trade relations are back on track after appearing to be a little bit off track last week?
A little bit off track. It was only the complexity. It's pretty complex stuff. We had a very good conversation with President Xi a little while ago, just before your arrival. In fact, we just hung up, and they said, "You're here." I said, "That's pretty good." Two great leaders of the world in a very short period of time. We had a very good talk, and we've straightened out any complexity. It's very complex stuff, and we straightened it out. The agreement was we're going to have Scott and Howard and Jameson will be going and meeting with their top people and continue it forward. But no, I think we have everything. I think we're in very good shape with China and the trade deal. We have a deal with China, as you know, but we were straightening out some of the points having to do mostly with rare earth, magnets, and some other things.
Those reduced trade tariff rates, they remain in effect?
Yeah, we have the deal. I mean, we've had a deal. We announced the deal, and we'll be, I guess you could say, I wouldn't even say finalizing it up, Scott. I would say we have a deal, and we're going to just make sure that everybody understands what the deal is. Okay? We had a really good conversation. By the way, he invited me to China, and I invited him here. We both accepted. So I'll be going there with the First Lady at a certain point, and he'll be coming here, hopefully, with the First Lady of China.
What do you expect from Germany?
Go ahead, please.
Did you talk about the Chinese students? Are you allowing them to come to the U.S.?
No, Chinese students are coming. No problem. No problem.
Okay, and
It's our honor to have them, frankly. Look, we want to have foreign students, but we want them to be checked. You know, in the case of Harvard and Columbia and others, all we want to do is see their list. There's no problem with that. This is anybody outside of our country, international students, because when we see some of the people that we've been watching, we say, where do these people come from? How is that possible? No, we want to have foreign students come. We're very honored by it, but we want to see their list. Harvard didn't want to give us the list. They're going to be giving us the list now. I think they're starting to behave, actually, if you want to know the truth.
Okay.
On Russia, are you willing to put more pressure on Putin to end the war by imposing new sanctions on Russia and also on China?
Well, remember, I'm the one that ended Nord Stream 2, going to a place called Germany, come to think of it. I'm sorry I did that. I don't know. But I ended Nord Stream 2. Nobody else did. And then when Biden came in, he immediately approved it. That's the largest, essentially the largest pipeline in the world, going to Germany and other countries. And by the way, we have so much oil and gas, you will not be able to buy it all. I mean, you literally, we have so much, and I hope we're going to make that a part of our trade deal because we have more than anybody else. We have actually the most, by far, in the world, probably double what anyone else has. So we'll work on that. I'm sure that's something we'll discuss today.
Mr. President,
what do you expect from Germany and what do you expect from the Chancellor?
Well, first of all, I'm glad to meet because I've been dealing with the Chancellor, and he's very good man to deal with. He's difficult, I would say. Can I say that? It's a positive.
Go ahead.
You wouldn't want me to say you're easy, right?
No.
Yeah, he's a very great representative of Germany. I think all we want is just going to have a good relationship. The rest will just sort of follow very easily. We'll have a good trade deal. I mean, I guess that will be mostly determined by the European Union, but you're a very big part of that, so you'll be involved. But we'll end up hopefully with a trade deal or we'll do something. You know, we'll do the tariffs. I mean, I'm okay with the tariffs, or we make a deal with the trade, and I guess that's what we're discussing now.
Mr. President,
Back there, please, go ahead.
Mr. President? Okay.
Is Germany doing enough on defense, Mr. President? Is Germany doing enough on defense?
What?
Defense spending.
is Germany doing enough on defense?
The Chancellor wants to...
Is Germany doing enough on defense?
The Chancellor wants to spend 3.5.
Well, I don't know. I mean, I haven't discussed it very much. I know that you're spending more money on defense now, and quite a bit more money, and that's a positive.
Definitely.
thing. I'm not sure that General MacArthur would have said it's positive, you know. He wouldn't like it, but I sort of think it's good. You understand what I mean by that?
I understand.
He made a statement, never let Germany rearm. And I said, I always think about that when he says, sir, we're spending more money on defense. I say, oh, is that a good thing or a bad thing? I think it's a good thing. But, you know, at least to a certain point. There'll be a point when I'll say, please don't arm anymore, if you don't mind. We'll be watching him. I'll get it.
Mr. President. Mr. Biden, Mr. President.
Yeah, Biden, you said Biden.
Your predecessor dismissed your auto pen investigation. He said he made all the decisions during his presidency. I'm curious your reaction to his dismissal.
Well, look, the auto pen, I think, is the big scandal outside of the rigged election of 2020. I think the biggest scandal of the last many years is the auto pen. And who's using it? I happen to think I know, okay, because I'm here. And I'm not a big auto pen person, fortunately. I'm glad. I'm very glad. It's an easy way out. But it's a very bad thing, very dangerous. You know, I sign important documents. Usually when they put documents in front of you, they're important. Even if you're signing ambassadorships and I consider that important. I think it's inappropriate. You have somebody that's devoting 4 years of their life or more to being an ambassador. I think you really that person deserves to get a real signature, not an auto pen signature. And I can tell auto pen easily. I can look at it. Like two little pinholes from pulling the paper, right? You always see the pinholes. Yeah. It's real easy to tell about auto pen. I think it's very disrespectful to people when they get an auto pen signature. Outside, auto pen to me are used when thousands of letters come in from young people all over the country and you want to get them back. And, you know, people use auto pens for that, to send a little signature at the bottom of a letter. We have thousands of them. We get thousands of letters a week. And it's not possible to, you know, do. I'd like to do it myself, but you can't do it. To me, that's where auto pens start and stop. But I'm sure that he didn't know many of the things. Look, he was never for open borders. He was never for transgender for everybody. He was never for men playing in women's sports. I mean, he changed. I mean, all of these things that changed so radically. I don't think he had any idea that what was, frankly, I said it during the debate and I say it now, he didn't have much of an idea what was going on.
Mr. President.
He shouldn't be, I mean, essentially whoever used the auto pen was the president. And that is wrong, it's illegal, it's so bad, and it's so disrespectful to our country.
Mr. President. Mr. President, will you lead your troops in Germany? And if I may ask a question to the Chancellor to answer in German for the German audience, how is your first encounter been?
The answer is yes. We'll talk about that. But if they'd like to have them there, yeah, we have a lot of them, about 45,000. It's a lot of troops. It's a city when you think of it. That's good economic development. They're highly paid troops, and they spend a lot of money in Germany. But the relationship with Germany is very important. Yeah, we'll be doing that. No problem.
May I say a few words in German to the German public? So, danke für die Frage. Wir sind hier im Weißen Haus und ich bedanke mich beim Präsidenten für den sehr freundlichen Empfang im Oval Office in diesem weltweit bekannten Raum. Ich freue mich sehr, hier zu sein und wir bereiten eine Vertiefung unserer Zusammenarbeit vor.
This is live sound coming from the Oval Office on Bloomberg Radio. The Chancellor of Germany, Friedrich Merz, meeting with President Trump today at the White House with a series of events, including lunch, a working lunch, and a bilateral meeting here in the Oval. Let's listen live on Bloomberg.
I understand almost everything and to speak as good as I can.
Very good. You know, it's
Mr. President, you've made
an achievement, actually.
Mr. President, the criticism that I've seen regarding, thank you, Mr. President. The criticism that I've seen, and I'm sure you've seen, regarding Elon Musk and your big, beautiful bill. What's your reaction to that? Do you think it in any way hurts passage in the Senate, which, of course, what is you're seeking?
Well, look, you know, I've always liked Elon, and it's always very surprised. You saw the words he had for me, the words of, and he hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible. It's the biggest cut in the history of our country. We've never cut. It's about 1.6 trillion in cuts. It's the biggest tax cut. You would say, people's taxes will go way down, but it's the biggest tax cut in history. It's we are doing things in that bill that are unbelievable. And when you look at what we're doing for small businesses, for people, for middle-income people, all of the things that we're doing, nobody's ever seen anything like it. And, you know, Elon's upset because we took the EV mandate, and, you know, which was a lot of money for electric vehicles. And, you know, they're having a hard time, the electric vehicles. And they want us to pay billions of dollars in subsidy. And, you know, Elon knew this from the beginning. He knew it for a long time ago. That's been in there. That's been, I would say, JD, that hasn't changed. That's been right from the beginning, Mr. Secretary. That hasn't changed at all, right from the beginning. But I know that disturbed him. He wanted, and rightfully, you know, he recommended somebody from that he, I guess, knew very well. I'm sure he respected him, but to run NASA. And I didn't think it was appropriate. And he happened to be a Democrat, like totally Democrat. And I say, you know, look, we won. We get certain privileges, and one of the privileges, we don't have to appoint a Democrat. NASA is very important. We have great people. General Kane is going to be picking somebody with our. We'll be checking him out and seeing. But he wanted that person, a certain person, and we said no. And, you know, I can understand why he's upset. Remember, he was here for a long time. You saw a man who was very happy when he stood behind the Oval Desk. And even with the black eye, I said, you want a little makeup? We'll get you a little makeup. But he said, no, I don't think so, which is interesting and very nice. He wants to be who he is, so you could make that statement too, I guess. Look, Elon and I had a great relationship. I don't know if we're well anymore. I was surprised because you were here. Everybody in this room practically was here as we had a wonderful send-off. He said wonderful things about me. You couldn't have nicer. Said the best things. He's worn the hat. Trump was right about everything. And I am right about the great, big, beautiful bill. We call it a great, big, beautiful bill because that's what it is. And again, biggest tax cuts in history, biggest economic development moves anywhere. We've never done anything like it. Business is spurred. And I don't know if you've seen the numbers, but the numbers came out. Even the CBO, which is run by Democrats, said that we're going to be doing, you know, I'd like you to discuss it, the 2.8 trillion, that CBO. This is a group of people that are Democrats. They're very hostile to us. They just came out with phenomenal numbers, what it does. You want to mention that, Scott?
Yes, sir. So what we've seen is we keep hearing from the CBO that there's going to be a large deficit from the bill, which we disagree with, but using the CBO scoring, they came out and scored the tariff revenue. We think it'll be the minimum of $2.8 trillion over the 10-year window, which actually puts the bill in surplus if you include the tariff revenue, which they won't do.
It gives you a tremendous surplus, but we're not allowed to use that. For some reason, they say scoring. Nobody knows what scoring means. Maybe a couple of people, but nobody. Somebody sits in the background. They say, well, we're not going to allow that. They're not allowing other things that we have that are tremendously profitable for our country. But if you saw the other day, CNBC, they came out with numbers, and the people on the show, very good people, I've watched them for a long time, they couldn't believe the numbers, how good they are. The numbers were incredible, and that was personal income and also very low inflation. We have very low inflation. We're down to 2% now, and maybe even lower than that. And when I took it over, it was a mess. Remember, we had the worst inflation probably in the history of our country. They say 48 years, but let's say I think it's worse than that. So we had the worst inflation in the history of our country under the Biden administration. Now we're down to a beautiful number, 2%. You'd actually like to keep it there. Better than zero is 2%. It's going down maybe to 1, and 1% is like perfect. That's perfect. You don't want to have zero for certain reasons that nobody is very interested to listen to. But we have almost perfect inflation. Grocery prices are down. Everything. Remember eggs? Eggs. We weren't going to buy another egg for the next 20 years. They were so expensive, right? Remember? You guys all hit me about eggs. Eggs have come down 400%. Everybody has eggs now. They're having eggs for breakfast again. But if you look at gasoline, very important. I think always the most important because it's the energy is the biggest factor. That's what happened. He screwed up our energy policy, and everything went up because energy went up. But now energy is way down, and they have states where you're at $1.98 a gallon for gasoline. So the costs have come way down. And one of the things I ran on was that. I ran on the border. We have the best border in the history of our country, 99.99%. It was last week, 3 people came in, 2 of them for medical reasons. We let them in because one of them had a heart attack. I think it was a nice thing to do, and one of them had something else. So we've never had, I had very good numbers for 4 years, but we really topped it. And I want to thank Christie and Tom Homan. They've done a fantastic job. But nobody mentions that anymore. Remember, a few months ago, the border was a total disaster. People were coming in by the hundreds of thousands of people a day, a week, a month. I mean, we had a month, 2 million people came in 1 month. The border was being overrun, and a lot of bad people, criminals, murderers, drug dealers. We had some of the worst people in the world coming in from all over the world. It's totally closed. And you know what? People are coming into our country, but they're coming in legally. So we've done a great job. Elon knew that. Elon endorsed me very strongly. He actually went up in campaign for me. I think I would have won. Susie would say I would have won Pennsylvania easily anyway, even if the governor ran, the real governor, not the governor from Minnesota, he's a sick puppy, that guy. That poor guy, I feel sorry for him. But they made a bad choice with him. But if you pick Shapiro or anybody else, I spoke to him recently about his house being set on fire, which was terrible. But if they picked him, I would have won Pennsylvania. I won it by a lot. But I'm very disappointed because Elon knew the inner workings of this bill better than almost anybody sitting here, better than you people. He knew everything about it. He had no problem with it. All of a sudden he had a problem, and he only developed the problem when he found out that we're going to have to cut the EV mandate, because that's billions and billions of dollars, and it really is unfair. We want to have cars of all types. Electric, we want to have electric, but we want to have a gasoline, combustion. We want to have different. We want to have hybrids. We want to have all. We want to be able to sell everything. And when that was cut, and Congress wanted to cut it, he became a little bit different, and I can understand that. But he knew every aspect of this bill. He knew it better than almost anybody, and he never had a problem until right after he left. And if you saw the statements he made about me, which I'm sure you can get very easily, it's very fresh on tape. He said the most beautiful things about me. And he hasn't said bad about me personally, but I'm sure that'll be next. But I'm very disappointed in Elon. I've helped Elon a lot.
Mr. President, I just want to clarify, did he raise any of these concerns with you privately before he raised them publicly? And this is the guy you put in charge of cutting spending. Should people not take him seriously about spending now? Are you saying this is all sour grapes?
No, he worked hard, and he did a good job. And I'll be honest, I think he misses the place. I think he got out there, and all of a sudden he wasn't in this beautiful Oval Office, and he's got nice offices too. But there's something about this one. I was telling the Chancellor, this is where it is. People come in here, even from Germany. They come in and they walk into the Oval Office, and it's just a special place. It's, World War I, it started and it ended here, and World War II, and so many other things. Everything big comes right from this beautiful space. It's now much more beautiful than it was 6 months ago. A lot of good things are happening in this room. And I'll tell you, he's not the first. People leave my administration and they love us. And then at some point they miss it so badly. And some of them embrace it and some of them actually become hostile. I don't know what it is. It's sort of Trump derangement syndrome, I guess they call it. But we have it with others too. They leave and they wake up in the morning and the glamour's gone. The whole world is different and they become hostile. I don't know what it is. Someday you'll write a book about it and you'll let us know. Yeah.
Mr. President, speaking of ending wars in this room, you were very critical of Vladimir Putin a couple of days ago. What kind of play is he playing from your perspective? What is it?
Well, look, he got hit. He's been doing hitting, so I understand it. But he got hit hard, and I don't think he's playing games. I think I've always said he wanted the whole thing. I thought he wanted the entire, everything having to do with Ukraine. That's something that would have never happened if I were president. The election was rigged. I didn't get to be president, but I got to be president now. And I think it's a much more important presidency, other than a couple of things like that. The war would have never would have never happened. The war with Ukraine, with Putin, would have never happened, ever, not even a chance. And it didn't happen for 4 years. And it wasn't thought of. I used to talk to him about Ukraine a lot. It was the apple of his eye, but he would have never done what he did. And I think mistakes were made by him, but I think mistakes were made by other people. The president should have never allowed that war. Biden should have never allowed that war to happen. If you had the right guy in here, that war would have never happened. Israel would have never happened with Hamas. That would have never happened. The attack on Israel would have never happened because Iran was broke. They had no money. They had no money to give to Hamas or Hezbollah or anybody else. And all of that would have never happened. Inflation wouldn't have happened. It was caused mostly by energy. And the Biden administration messed up my great energy policy. We were down into the 190 a gallon, and it would have never happened. It was caused by energy and their bad spending on the Green New Scam and other things that they spent on. But all of those things would have never happened. But maybe most importantly, the war, Chancellor, with Russia would never have happened with Ukraine. It was something that would have, you know, I dealt with Putin a lot. There was no chance, zero. And, you know, a lot of people say, how do you know? For 4 years, it didn't happen. There was never a chance of it happening. And he understood the consequences. Now, it's a shame. And when you see all of those people, they came out with a report today that millions of people have died, much more than people thought. And I've been saying that for a long time. The amount of death in that war is far greater than the news has been reporting, or than, frankly, that either side has been reporting. It's a very sad thing. And I can tell you, just speaking for the Chancellor, because we speak about it, he feels the same way. He wants to see it ended. Would you like to say something?
Absolutely. And I'm here, Mr. President, to talk with you later on how we could contribute to that goal. And we all are looking for measures and for instruments to bring this terrible war to an end. And may I remind you that we are having June 6th tomorrow. This is D-Day anniversary, when the Americans once ended a war in Europe. And I think this is in your hand in specific, in ours.
That was not a pleasant day for you?
No, that was not a pleasant.
This was not a great day.
In the long run, Mr. President, this was the liberation of my country from Nazi dictatorship.
That's true.
So,
that's true.
And we know what we owe you. But this is the reason why I'm saying that America is again in a very strong position to do something on this war and ending this war. So let's talk about what we can do jointly, and we are ready to do what we can. And you know that we gave support to Ukraine, and that we are looking for more pressure on Russia. The European Union did, and we should talk about that.
We will talk about it. And,
Yeah.
you know, it's good timing. The numbers for our country are through the roof, the economic numbers, because of the election and because of tariffs and other things, a lot of things. But we've had some of the best numbers we've ever had. They were reported yesterday, the day before, and even today. Country's doing really well. I think that one of the things you'll be most interested in is that 6 months ago, we were having a hard time getting anybody to join our military. I mean, they just couldn't do it. The numbers were record low. We couldn't get people to join the military. It wasn't me. This was before I got there, the past administration. But 6 months ago, a year ago, the numbers were record low. You couldn't get them to join. That included the police. And you couldn't get them to join. Now, we just hit the highest number in the history of our country, we think, but very close, but the highest in the history of our country, recruitment, joining the Army, Navy, Air Force, Marines, Coast Guard, police forces all over the country.
What did you do for that? What was the reason?
Spirit. They love our country again. You know? You're going to do the same thing. Spirit. We have great spirit is back in our country, and it's very simple. And, you know, it was only, Susie, 6 months ago, right, that you got reports. You're the one that released them, that you couldn't get anybody to join the military, and now we're stocked. Every service now is packed, and we have waiting lists of people trying to get in, as good as we've ever had in the history of our country. So that's an honor. That's a great honor.
Mr. President, on the war.
You've asked. You've had enough. Go ahead.
Mr. President,
So would you consider to put more sanctions on Russia? Because this discussion is going on now for weeks and months, and you tweeted about it once, but then nothing happens. So
yeah, when I see the moment when we're not going to make a deal, when this thing won't stop,
is there a deadline?
if that moment, yeah, it's in my brain, the deadline. When I see the moment where it's not going to stop, and I'm sure you're going to do the same thing, will be very, very, very tough. And it could be on both countries, to be honest. You know, it takes two to tango. But we're going to be very tough. Whether it's Russia or anybody else, we're going to be very tough. That's a bloodbath that's going on over there. And when I see the moment where I say, well, they're going to just keep fighting. You know, I gave the analogy yesterday when I spoke to President Putin. I had a 2-hour and 15-minute call with him. Sometimes, and this is me speaking maybe in a negative sense, but sometimes you see two young children fighting like crazy. They hate each other and they're fighting in a park. And you try and pull them apart. They don't want to be pulled. Sometimes you're better off letting them fight for a while and then pulling them apart. And I gave that analogy to Putin yesterday. I said, President, maybe you're going to have to keep fighting and suffering a lot because both sides are suffering before you pull them apart, before they're able to be pulled apart. But it's a pretty known analogy. You have two kids, they fight. Sometimes you let them fight for a little while. You see it in hockey. You see it in sports. The referees let them go for a couple of seconds. Let them go for a little while before you pull them apart. And maybe, and I said it, and maybe that's a negative because we're saying go, but a lot of bad blood. There's some bad blood between the two. I have to deal with it, and the chancellor has to deal with it. It's incredible. The level of, there's a great hatred between those two men, but between the warring parties. Great hatred.
You say and believe apparently that there's no immediate peace.
What?
That there's no immediate peace. There will be no.
Well, I can't. I'd love to have immediate if I could. If I could, but we don't have immediate. You know, it's like I'd love to have that. I'd like it to start. Right now, we would leave a room if we knew the war could end. We'd say, forget about you guys, forget about trade, right? Yeah. We'd say, let's go settle it. There's some additional fighting that's going to go on. You know, he attacked, and they attacked pretty harshly. They went deep into Russia, and he actually told me. I mean, I made it very clear. He said we have no choice but to attack based on that, and it's probably not going to be pretty. I don't like it. I said, don't do it. You shouldn't do it. You should stop it. But again, there's a lot of hatred. And, you know, I'm very proud of the fact that with India and Pakistan, I was able to stop that. And those are nuclear powers. And that was getting close to being out of hand. And I spoke to some very talented people on both sides, very good people on both sides. And I said, you know, we're dealing with you on trade, Pakistan and India right now. I said, we're not going to deal with you on trade if you're going to go shooting each other and whipping out nuclear weapons that maybe even affect us. Because, you know, that nuclear dust blows across oceans very quickly. It affects us. And I said, if you're going to do that, we're not going to do any trade deals. And you know what? I got that war stopped. Now, I hope we don't go back and we find out that they started, but I don't think they will. They were both good. They were well represented. I want to congratulate both countries because, as you know, the leader of India, who's a great guy, was here a few weeks ago. We had some great talks. We're doing a trade deal. And Pakistan, likewise, they have very, very strong leadership. Some people won't like when I say that, but, you know, it is what it is. And they stopped that war. Now, am I going to get credit? I'll never get credit for anything. They don't give me credit for anything, but nobody else could have done it. I stopped it. I was very proud of that. I wish we could do the same thing with Ukraine and Russia. And at some point, it'll happen. I believe that. And if it doesn't happen, or if I see somebody's out of line, if Russia's out of line, you'll be amazed how tough. Remember this. They like to say that I'm friends with Russia. I'm not friends with anybody. I'm friends with you. I'm not friends with that. I want the right thing to happen for our country, for everybody, for humanity. But I'm the one that stopped the pipeline. It's called Nord Stream 2. Until I came along, nobody ever heard, not one person in this room ever heard of Nord Stream 2. You probably did,
Yes,
because
I
it
did.
went to Germany. He's the only one
Knowing that
heard
this
it.
was a mistake.
But I
Yeah,
stopped
right.
him. I stopped it. Yeah, and you've said that openly.
Yeah.
It was a mistake because, and I used to go with Angela. I'd say, well, wait a minute. We're spending all this money to defend you against Russia, and then you're giving Russia billions of dollars a month. What kind of a deal is that? You know, which was, but you said it better than anybody else. I appreciate it. But I'm the one that stopped it. And that was the biggest economic development job, if you want to call it that, in the history, think of it, in the history of Russia. That was a massive, it's the biggest pipeline in the world. Going to go all over Europe, not only to Germany. You know, they were Germany, but then they were branching off all over to Europe. Nobody ever heard of, not one person of you heard of it. And I stopped it. It was dead. And then they say, I'm friends with Putin. I got along with him. He respected me, I respected him. It would have never happened. But I stopped Nord Stream 2. When Biden came in, almost the first week, he approved it. He let it be built. And then they say that I wasn't tough on Russia. Putin said to me, you know, you're not tough on Russia. You stopped the biggest, most important job we've ever done. You stopped it. And Biden came in and he let it be built. And I'll tell you what, I'll never forget the day. I had it totally stopped. They weren't building. They gave up on it. They weren't able to. And then Biden came in and he let it build. I couldn't believe it. Okay, one or two questions more, please. Any questions? Any question for the Chancellor? Go ahead, for the Chancellor. I like his answers much better.
Would you continue to support Ukraine?
Yeah, I'm with Ukraine. We just signed a big deal on rare earth with Ukraine, and I want to. You know what? I'm for stopping killing. Really, that's what I'm for. Again, a war that would have never started, should have never started. I want to see the killing stop. We spent $350 billion, much more than Europe, but Europe spent a lot also. And they spent way over $100 billion.
Yeah.
So you're talking about close to $500 billion went into that whole thing. And it's not even the money. And I know with you too, it's a lot of money, but it's the death that's being caused. We went to the Middle East. I went last week to the Middle East. We took in $5.1 trillion. That's many, many times. That's 30, 40 times, 50 times more than what we're talking about. It's think of that, $5.1 trillion of investment with one trip that lasted 4 days. So it's not the money. It's a little the money, but not the money, the big thing. The big thing is the death. The death of, and really the decimation. You've lost a whole culture. You know, Ukraine had the most beautiful turrets. They call them turrets, the little towers, beautiful towers, the most beautiful in the world. They're all now laying on their side, blown to smithereens. It'll never happen again. They've taken away the culture of a country. They've taken away the heritage of a country. It's a terrible thing. But most importantly, again, is the death. 5,000 plus people a week, soldiers, are being killed. He doesn't want that, and I don't want that. One more. Yeah, please.
Thank you. Mr. President, do you support the Graham bill on putting high tariffs on China?
I haven't looked at it, but they'll be guided by me. That's the way it's supposed to be. They're going to be guided by me. No, I haven't looked at it. It's a bill on sanctions, etc. I'm a very quick study. At the right time, I'll do what I want to do. But it could very well be okay. I'll have to see. But they're waiting for me to decide on what to do, and I'll know maybe very soon. It's a harsh bill. Yeah, very harsh.
We'll take one more now.
I would like to have a question to the Chancellor as well, because do you agree with the analogy the President made on the war between Russia and Ukraine as being a fight between two kids? Is that how you view that as well? And what do you actually want the U.S. President to do in this?
Well, I think we both agree on this war and how terrible this war is going on, and we are both looking for ways to stop it very soon. And I told the President before we came in that he is the key person in the world who can really do that now by putting pressure on Russia. And we will have this debate later on again, how we can proceed jointly between the Europeans and the Americans. And I think we are having the duty to do something on that now, to stop it after 3.5 years, which is really terrible. Look at the kids, the kids which were kidnapped from Ukraine to Russia. This is all terrible. And so we are talking about instruments, measures, what we can do. And my personal view is clear on that. We are on the side of Ukraine, and we are trying to get them stronger and stronger just to make Putin stop this war. And this is our approach.
We get satellite pictures of the war field, and you don't even like to look at them, right?
It's terrible.
So
it's really
bodies, arms, heads, legs all over the place, and you've never seen anything like it. It's so ridiculous.
And this is only by Russian weapons against Ukraine. This had never happened with Ukraine weapons against Russia. Never. Ukraine is only targeting military targets, not civilians, not private, not energy infrastructure. So this is the difference, and that's the reason why we are trying to do more on Russia, how to stop this war.
Well, in this case, I'm talking about the battlefield, the soldiers on soldiers. But you could also say that, too, with the cities. The cities are being hit also. So it's a terrible, terrible thing. Somebody said autopen. Did I hear the word autopen?
I'm just curious.
Because I think it's the biggest scandal maybe in the last 100 years in this country. So when I hear that word, I think it has to be discussed, because the fake news will try and hide it, and we can't do that.
Well, that's what I'm asking. Have you uncovered any evidence that anything specific was signed without President Biden's knowledge or by other people in the administration acting illegally?
Well, I don't think Biden would know whether or not he signed it.
I'm asking if you've uncovered any of that information.
No, but I've uncovered, the human mind. I was in a debate with the human mind, and I didn't think he knew what the hell he was doing. So, it's just one of those things, one of those problems. We can't ever allow that to happen to our country. The danger our country was in, and I know some of the people that worked with him, radical left, horrible people. And I could give you the name of some of the people that used the autopen, because I'm here, and I ask questions about people that were here also. There are a lot of people that were here when that happened, and they're here right now, and they'll answer your question very accurately. But I know some of the people that use that autopen, and those are not the people that had the same ideology as Joe Biden. These were radical left lunatics that used that, and they didn't get elected. He didn't get elected either, actually. Thank you very much, everybody.
Thank you, guys. Thank you, guys.
Roughly 45 minutes in the Oval Office with President Trump and the Chancellor of Germany. This is live from Washington on Bloomberg Radio, satellite radio channel 121. Of course, you're always able to watch us on YouTube, live from Washington, by searching Bloomberg Business News Live. Quite the romp there. We covered a lot of ground. To quickly, if you're just joining us, just stop down on some of what we heard. Big questions about whether the president would speak to the objections, passionate objections from Elon Musk when it comes to the reconciliation bill. One of the first things that came up, President Trump saying, Elon and I had a great relationship. I don't know if we will anymore. I was surprised. He said that Elon was upset about the EV mandate, something that we've heard quite a bit about here. In fact, a story on the terminal that we've crunched numbers on this, as a matter of fact, with Tesla, according to JP Morgan, facing $1.2 billion of risk in this Trump tax bill. President Trump saying that Elon hasn't said a bad thing about me personally, but I'm sure that'll be next. I'm very disappointed in Elon. Only moments later, Elon Musk takes to Twitter writing, whatever. Keep the EV solar incentive cuts in the bill, even though no oil and gas subsidies are touched. He goes on to say, either you get a big and ugly bill or a slim and beautiful bill. Slim and beautiful is the way. Ukraine, of course, looming large in this conversation with the Chancellor of Germany. On Vladimir Putin, President Trump saying he got hit, referring to Ukraine's mission to go deep into Russia last weekend. He says he's been doing hitting, so I understand it, but he got hit hard. I don't think he's playing games, knowing that a retaliation is coming, as President Trump wrote on Truth Social yesterday. He likened them to kids in a schoolyard, Ukraine and Russia, knowing, of course, that Ukraine was invaded by Russia, saying sometimes you see the two kids fighting like crazy. Sometimes you're better off letting them fight for a while. He got into the CBO, Congressional Budget Office, scoring of the reconciliation bill, saying everyone says scoring. No one knows what scoring means. When it came to gas prices, he said we have states where gas is $1.98 a gallon. We have no evidence that that is the case in any of the 50 states. And then, of course, a deep dive on the auto pen, saying it's the big scandal of the last many years, remembering that Donald Trump last evening announced an investigation from the office into what happened in the prior administration, the use of the auto pen, and what he describes as a cover-up of Joe Biden's mental decline. That's what we have for you today at the White House. That meeting in the Oval will now move into a lunch with the Chancellor of Germany, and we'll keep tabs on any other headlines that we get from the White House. We want to bring you into an important conversation right now on Bloomberg with the mayor of San Francisco, Daniel Lurie, sitting down with Bloomberg Business Week editor Brad Stone. Let's put an ear on this conversation live on Bloomberg.
Yeah, so those are two good examples. Private-public partnership is always needed. Every city does this. This is not something new. It just hasn't been done to great effect in San Francisco for a while. And it's not about being sustainable. It's about giving us test cases. We had Chris Larson of Ripple just announce a major investment in a real-time intelligence center in San Francisco to make sure that we're using technology to keep San Franciscans safe.
But is that the proper use for private funds?
Yeah, so he gets something up and running, and then the government takes it over. We are trying to build more drug treatment beds, more mental health beds. So we have the private sector contributing close to $40 million to help us with the capital projects, but then government, which it is our responsibility to pay for the ongoing services to keep people treated. But we are facing $1 billion budget deficit here in San Francisco. And so those funds help kickstart something that we're able to continue to pay for in the out years.
I mean, do you think the business community, and in particular the tech community, has a responsibility toward the city that was previously unmet?
I think any company, any individual that's had success or is doing business in the city has a responsibility to be part of the community. Much has been made of my background coming from Levi Strauss. That company has been around for 160, 170 years, always part of the community. We have great companies like Gap, Salesforce, OpenAI is getting involved in the company. So yes, companies have a responsibility, but government has a responsibility as well, and there needs to be partnership. And what we did as a city was we took business for granted. And we thought, we can just continue to increase taxes, not deliver clean and safe streets, and they'll stay. Well, guess what? They left. We can't take it for granted anymore. We're not. We're seeing businesses, we're seeing jobs coming back to San Francisco. Coinbase famously left.
They paid to leave.
They paid to leave, and now they're 150,000 square foot lease just a few blocks from here in Mission Rock, which is taking off. Visa, another example of a company that really gets their responsibility to investing back in the community. They're doing a lot around youth homelessness. And so really, those executives over there, Ryan and Oliver Jenkins, they get it. And we need more companies like that that will lift all boats.
At the same time, you have to balance the demands or the needs of these companies. You recently allowed Waymos to drive on Market Street, and if any of you are visiting and you haven't taken a Waymo, you should.
It hasn't happened yet.
Okay,
yep.
So it will.
We're in talks with them.
But, there are companies like Uber that cannot access Market Street. They're quite upset about that. So how do you make sure that you don't end up prioritizing the needs of one company versus another?
Well, here's what I'd say. I'm prioritizing the residents of San Francisco. 840,000 people, that's who my customers are. And I want business here because I want them bringing their jobs here. I want them bringing their tax revenue here. And we're going to have conversations. They'll be transparent. They'll be open. We're talking to the leaders of all of these companies. We have talked to Waymo about Market Street, and we're in discussions with them about it. That has not happened yet. And we'll continue to have discussions. I want us to be open for business. I want everybody in the city to know who we're talking to. and we'll be completely transparent about it.
Do you have a plan to get tech workers out of their cloistered office cafeterias and doing their dry cleaning in the city versus, in the workplace?
Well, listen, my job is to create the conditions so people come back to work downtown. We have 35, 36% empty office space downtown. That number is slowly going down. We need it to go more rapidly down. So I'm not focused on the cafeterias. I'm focused on public safety, clean streets, getting people that are struggling with addiction off the streets so that workers want to be back downtown. And when you have workers coming back downtown, and part of creating the conditions, we've created these things called entertainment zones. On 2nd Street, just a couple blocks from here, there is a night called First Thursdays, where we close down the street on Thursday night, obviously, and 22,000 people were listening to music on the streets the other night. We have 21 entertainment zones across the city in great neighborhoods, and I'm telling you, it's happening. So that's my job. My job is not to dictate to private enterprise how they do their business. I want them doing their business here in San Francisco.
I know former Mayor Ed Lee was a mentor of yours. His Twitter tax breaks, as they were colloquially called, drew Twitter and Uber and Block to mid-market, which now, frankly, is they've all left and it's back to kind of being a disaster. What did the city learn? What did you learn from those tax breaks?
Back to what we said earlier, that it can't be a one-way street, and it won't be. And I am building relationships with nonprofit leaders, with labor leaders, with business leaders. I'm building relationships, fortunately or unfortunately, with people on the street. And it is a two-way street. There's no more that we're just going to hand things out and just let people do whatever they want. I want to have people coming in. I want to welcome them with open arms. And then, like I said, I want them part of San Francisco, part of the fabric of this city. Because your employees, if you're a CEO, you want your employees liking where they work. I just had one of the executives, the CEOs that I talked about earlier, tell me that they did a survey of their employees about where they wanted to be in the Bay Area. San Francisco was where they wanted to be because of our arts and culture, because of the restaurants, because of nightlife, because of these entertainment zones. And so what we learned is you can't just do a handout without any obligation and responsibility.
So you mentioned the budget and the $1 billion shortfall. Your proposed budget eliminates about 1,400 positions, most of them sort of vacant. You talk about perhaps 100 or so layoffs. And yet you've been criticized for not taking a bigger swing. You've got a sympathetic board, maybe that's a strong word, but a moderate board of supervisors, a lot of political capital. Why haven't you, taken a bigger cut at San Francisco's budget problems?
I mean, we actually did quite a lot of right sizing in this budget. It took us a long time to get in this mess. It's going to take us some time to get out. What I am really proud of is that this budget sets us up on the path, focusing on core services for an economic recovery in years 2, 3, 4. Because I do think it's happening, businesses coming back. There hasn't been this type of cuts in 17 years. And so people can argue what they want. People say I did too much yesterday. We had people saying, how dare you? And so we've made nobody happy, which I think might be my job. Listen, I took no joy in any of these job losses. It was a really difficult budget, but we had to set ourselves up. We have so much uncertainty, not only at the federal level, but at the state level. We're seeing cuts that pass through to us from both state and federal sources. And so we set aside $400 million in our budget reserves for the uncertainty heading our way. We had to balance this nearly $1 billion budget by law, and we had to make difficult choices, and we did, and we're standing by that.
Well, since you brought it up, let's talk about that $400 million that you've set aside, perhaps for the eventuality that the Trump administration targets San Francisco. We get $2 billion from the federal government. So you know, what is the risk there? And do you see the administration coming after San Francisco, which is a sanctuary city like others that Trump has targeted, such as Chicago?
It's all real. It's all possible. And how I answer that question is that I'm focused on San Francisco. I can only control what I can control. And that's why the budget, that's why we really focused and prioritized core service around public safety, clean streets, where we really believe if we do that well, we're off to the races. And then revenue comes in directly into city coffers. And that's what I'm focused on. If I worried about what was coming from Washington or from Sacramento, I wouldn't be able to do my job because it seems to change every hour. And so I'm staying focused on San Francisco.
There is an argument advanced by organized labor and some other political allies that the budget shortfall is largely the problem or the fault of tech companies like Uber and Airbnb that are suing over taxes that they believe the city unfairly levied. Tell us what you make of that argument.
So just to be clear, all those companies have paid the taxes.
Right.
They just feel like they overpaid, and so there's a lawsuit
And
happening.
then you have to keep those funds.
And you have to keep it in reserve for if you lose the lawsuit. So I'm not allowed to talk about ongoing litigation. The big thing that I want people to understand, and you all understand this in this audience, is what we were doing as a city was we were using one-time funding from the feds and from the state to pay for ongoing salaries and support, and that's where the 1,400 positions comes in. We're putting an end to that. We are no longer using one-time funding to pay for salaries and pay for positions, whether they're empty or not, and most of them were vacant positions. But those vacant positions actually do cost us money, especially in years 2, 3, 4. And so we're ending that practice. And that's an important thing for everybody to understand. This is not about, a one-time litigation. And so once again, I want business back in San Francisco. I want them paying taxes here. I want them growing their employee base here. And I'm telling you, it's happening.
2 more questions before I lose you. Okay. Maybe people aren't familiar. Your Instagram game is strong, like multiple times a day. It's very well done. Did you realize when you started campaigning for the job that it is essentially indistinguishable from the role of Instagram influencer?
Well, you all be the judge of that. My kids, I think they acknowledge some of the reporting that's been done that that I'm awkward, that I'm a dorky dad, so my kids are getting a kick out of it. I'm having fun with it because my team and I, we know that we have to get the message out. We want to be selling our city. We think it's important to show off all the small businesses that are driving our economy, that are driving our city. That people around the country need to know that San Francisco is on the rise, and this has given us an avenue to do that on a daily basis, and it's been fun.
You enjoy doing it?
People ask me what the biggest surprise is of the job, and I say I love it. Like, I love my job every single day. I honestly, I think I have the best job in the country. Not just in politics, and I definitely have the best job in politics. You can talk to people that have been mayors around this. You go to DC, you go to Sacramento, I don't think they have as much fun as I do.
Okay, last thing. You can really measure the health of a city by the number of construction cranes. And I think we haven't really had that many in San Francisco.
That's fair.
If over the course of your term, you could build one thing, and maybe your name's on it, maybe it isn't, but you could leave one construction legacy in San Francisco, what would it be?
That's a great question. For me, it's getting more housing built at all income levels. So that's a great question on the cranes. I want cranes all over the place. And
we have a long way to go.
We have a long way to go, but I'm telling you, it's going to happen. San Francisco, we are on the rise. We're on our way back. I hope you'll be part of building it. I appreciate you having me, and I end everything with, let's go San Francisco. We got this.
Thank you for joining us.
Thank you.
Appreciate you.
Live from the Bloomberg Tech Summit in San Francisco, the mayor of that city, Daniel Lurie, speaking in conversation with Brad Stone, Bloomberg Business Week editor, at a conversation that we wanted to make sure you got to hear on Bloomberg Radio. We're covering the waterfront today, and I guess I should say crossing the country to bring you the best content in politics. We spent the first chunk of this hour, of course, in the Oval Office with President Trump making a lot of headlines about everything from Elon Musk to Ukraine. We're going to dive into that coming up with our political panel. We do need to watch Wall Street, though, as always. It's been a minute, and for that, we turn to our friend Charlie Pellet in New York for an update on the markets today. How's it look, Charlie?
Right now, higher across the board, a lot of green on the screen. Want to be the best content in the business, and we have got the Dow, the S&P, NASDAQ all higher right now. S&P up 8, well off session highs, still a gain there of 0.1%. Dow Industrials up 53 right now, up 0.1%. We got NASDAQ also higher now by 0.1%. The Bloomberg Mag 7 index, though, in the red, down 0.5%. Should point out Microsoft climbing to a record today, up by 0.8%. We've got the 10-year 4.38%, the 2-year 3.90%. Gold down 0.6%, 33.50 the ounce, and West Texas Intermediate crude up 0.9%, 63.39 a barrel. Briefly, Circle Internet, the IPO shares trading now up by 186%. We do see another trading halt there because of volatility. Back we go to Washington. Balance of Power continues. Once again, your host, here he is, Joe Matthew.
It's like the good old days are here again, Charlie. How about that for the big IPO? We'll get back with Charlie a little bit later on here in the program to see how the Thursday trade is going. Yeah, you made it to Little Friday. I'm glad you're spending time with us here on Balance of Power. Thursday edition on the radio, satellite radio 2, channel 121, and YouTube, where you can find us by searching Bloomberg Business News Live. Want to point you to something good we've got coming up at the top of the hour. We're a variety show here of sorts today at the intersection of politics and business. We'll bring you back to San Francisco, the Bloomberg Tech Summit, for a conversation with the CEO of Uber. Dara Khosrowshahi is going to be talking in conversation coming up in our second hour. We're also going to spend some time with the mayor of Washington, D.C., Muriel Bowser, in studio here on Balance of Power. A lot of talk about Elon, of course. That's been the case ever since he left town and started getting upset about the reconciliation bill, which, of course, he's called disgusting and a lot of other things. The president had his first chance to weigh in on this fit of Twitter posts and vitriol coming with the former head of the Doge, of course, now back to work at Tesla and SpaceX, even today, taking issue with this idea that he doesn't like the bill because of EV tax credits. Listen to Donald Trump talk about his relationship with Elon Musk and his feelings about this pushback.
I've always liked Elon, and it's always very surprised. You saw the words he had for me, the words of, and he hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible. It's the biggest cut in the history of our country. We've never cut. It's about 1.6 trillion in cuts.
Elon Musk was watching, and he never misses Balance of Power. Remember yesterday, Donald Trump posting on Truth Social about Elizabeth Warren while we were talking with her? Well, just like that, Elon Musk posting to Twitter. This is going to take me a minute here. We've got a lot going on. Whatever, says Elon Musk. Keep the EV solar incentive cuts in the bill, even though no oil and gas subsidies are touched. Very unfair. But ditch, he says, the mountain of disgusting pork in the bill. Slim and beautiful is the way, says Elon Musk. But it's getting worse now. He's been up all night or something, and he's on Twitter again. The president said it's going to get bad, right? He said he's going to start talking about me. That was the quote. He hasn't said anything bad about me personally, but I'm sure that'll be next. And here we are. Elon Musk on Twitter. Without me, Trump would have lost the election. Dems would control the House, and Republicans would be 51-49 in the Senate. Such ingratitude, says Elon Musk. Boy, people at the beginning of this whole Doge experiment were talking about when the falling out was going to happen. We were all told we were asking the wrong questions, but now we're watching it in real time with the help of our panel. Bloomberg Politics contributor Jeannie Shanzano is with us, Senior Democracy Fellow for the Center of the Study of the Presidency and Congress. Our Democratic analyst Lester Munson is back, too. We've missed Lester, our Republican strategist, principal of international practice at BGR Group. It's great to see both of you here. Lester, do you want a ringside seat here as our Republican, or are you afraid about what this might become?
This has been a fantastic plot development just in the last few days, Joe. I think highly entertaining, very clickable, a lot of eyeballs being attracted to this whole debate. I think that at the end of the day, that's going to end up being the more notable thing rather than any kind of impact on the votes on the Hill. And I think Elon is going to discover that his political throw weight might not be quite what he thought it was.
Boy, well, we're about to find out, Jeannie, aren't we? I know you want a front row seat to this. How bad can this get for Donald Trump?
Whatever, Joe and Lester, whatever. It's bringing me all back to my Valley Girl days. I am just with Lester. I am loving this. I think the best line I heard was one of the representatives said the other day, it's like watching mommy and daddy fighting. And I think there's some truth to that. The reality of this is that this is what it is like with Elon Musk off of the reservation that is the Trump administration. And I keep wondering if in the end, if there are problems with this bill, which there could be, if the Trump administration and we all look back and say the biggest mistake that they made was, if you believe the EV portion, not allowing the EV mandate to go forward or whatever else he wanted, because he is unlike anyone else in terms of the huge platform he has to speak out to the American public and the world about this. I think it's very, very tough for Donald Trump to ignore that or push that aside.
Wow. What do you think is going on here? Lester, is it about the EV mandates? Is it as simple as that? Because they were both asked about that. In the first 100 days, Donald Trump says Elon never asked him about it, never made a point about it. Elon Musk said he didn't need him. Tesla was beating everybody else. Now it's all about EV mandates. But there have been hit jobs on his drug use recently, his personal issues. Is this some sort of personal meltdown? How do you chalk this up?
I don't think it has anything to do with the EV policy. I suspect this is more about Musk realizing that his budget-cutting efforts at Doge were really just a tool for the president to keep the Freedom Caucus in the House on side during this budget reconciliation process. I think Elon Musk somehow missed the joke that was a distraction from the main effort, which is to get this fairly large spending and tax cut bill through Congress in a way that kept the Republican Party together. Elon Musk was a tool in that. Doge was a tool in that, and I think he must not have realized that until just recently when he saw some of the cost estimates for this bill going forward.
Yeah. I'll tell you what, look, Lester, if that turns out to be right, that is brilliant analysis, Jeannie. Did Donald Trump have this plan that way the whole time? Put Elon Musk, of all people, in front of the Doge, give him a chainsaw, and get the Freedom Caucus off my back.
No, I don't believe this is some kind of 3D chess that's being played. I think the reality for Elon Musk is, like many people, he can do the math. This is not what Donald Trump needs or wants. So if that was the strategy, it was a very poor one and very much unlike Donald Trump. For Elon Musk, this is problematic and unsustainable fiscally, and he is right about that. He is upset about the EV mandate, sure, but I don't think that's the bulk of it either. And I think the reality is they should have kept him in the fold, whether that allowed him to be a special employee going forward or whatever it was, because Elon Musk outside of the administration is a huge challenge for them. So I can't imagine this is what Donald Trump wanted or needed. And if it ends up really destroying this bill, they are going to look back at some of the big mistakes they made about not keeping him in place. If there's one person you had to keep there, it was Elon Musk.
You think Trump blocks him? Maybe Elon blocks Trump? That's what the kids do now, right? The thing is, JP Morgan crunched numbers on this, Lester. Trump's massive tax bill, it says, would largely eliminate a credit worth as much as $7,500 for buyers of some Tesla models. That would translate to $1.2 billion in a hit to Tesla's full-year profit. That sounds meaningful, doesn't it?
Yeah, but I also think Elon saw this coming, and he also made. This is a rare disagreement between Jeannie and me. I think Elon misread this politically. He thought it would be better to be insinuated with President Trump as closely as possible, not necessarily for the EV mandate, but maybe for some of his other business operations. He's got a lot of dependency on governmental policy decision making, so it wasn't a bad idea for him to be involved. I think he got a little carried away with the Doge mandate, and that's kind of what caused this schism more than anything else.
You do wonder what happens to the golden key. That was less than what? It was just on Friday. It's been less than a week since he got the key. I also think both of these men know how much a reunion would sell. Just imagine the ticket prices down National Harbor, the chainsaw, Trump and Elon back together again. Always leave room for the reunion tour. Our panel will stay with us in our second hour. Jeannie Shanzano and Lester Munson with much more ahead, including our conversation with the CEO at Uber on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
The feud gets real between President Trump and Elon Musk. Welcome to the Thursday edition. As the president tells reporters he is very disappointed in Musk as the former Doge head keeps criticizing Trump's big, beautiful bill. Alongside Kaylee Lyons, I'm Joe Matthew in Washington, where it's already been a day. Kaylee, he's back on Twitter right now saying Donald Trump would have lost the election without him.
Yes, specifically, not just Trump would have lost the election, but Dems would control the House and Republicans would be 51-49 in the Senate, is the contention of Elon Musk, who went on to say such ingratitude, as he also claims, whatever. Don't reinstitute the EV credits that are being rolled back in this one big beautiful bill, which, by the way, he says can't be both big and beautiful. You either get big and ugly or slim and beautiful.
It's been quite the romp here. As President Trump was talking with the Chancellor of Germany, Elon Musk is live tweeting about that with the whatever remark that you can see on Bloomberg TV and on YouTube. We've had a couple dozen posts since yesterday from Elon Musk upset about adding to the deficit. The president says he's very disappointed in Elon Musk and he doesn't understand how the bill works.
Yeah, and of course that bill is still being worked on in the United States Senate as we speak after a meeting at the White House yesterday between the Majority Leader and Senate Finance Committee members and the president. So there's a lot we're following here in Washington, keeping in mind that Merz-Trump meeting also had plenty in regard to geopolitics too after President Trump's phone conversation yesterday with Vladimir Putin and today with China's Xi Jinping. So we'll get into all of that this hour, but we begin as always with a check on the markets, and Charlie Pellet has a look from New York. Hey, Charlie.
Thank you very much. Indeed, quite a romp for the U.S. stock market right now. Last update, we told you stocks were higher. Right now, we are in the red, very much in the red. Do want to begin, however, with that Circle IPO. Circle Internet started trading. We are seeing a trading halt right now, but the stablecoin issuer opened up 123% above the $31 IPO price. Right now, we've got shares just resuming right now. CRCL on the ticker, and I'm looking at the last quote going by, up by 170%. The Dow, the S&P, NASDAQ, all very much in the red right now. Wall Street refraining from making big bets ahead of tomorrow morning's jobs report, which may provide key clues as to whether the Fed will be able to meet market expectations for 2 rate cuts this year. The S&P now lower by 15, down 0.3%, just about the lows of the day. The Dow down 32, drop there of 0.1%. NASDAQ down 77. For NASDAQ, the composite index down 0.4%. 10-year 4.37%, with the 2-year 3.90%. Gold is down $20 the ounce, down 0.6%, and Bitcoin right now down 1.2%. West Texas Intermediate crude 63.22 a barrel, up by about 0.6%. After earnings, shares of Sienna down now by 14.1%. We will be hearing from Broadcom and Lululemon after the close of trading. Broadcom right now up by 0.2%. Balance of power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, we are all transfixed by what appears to be the makings of a very big bromance breakup between President Trump and Elon Musk as they continue to publicly trade barbs over each other and, of course, the president's one big beautiful bill, which Elon Musk has been railing against for days, specifically noting the price tag of the bill, the impact it could have on the deficit, while Republicans say, including President Trump, that this is all about Elon Musk not liking the EV credits being rolled back as part of this legislation. But of course, Joe, that's not all this legislation does. This also holds a great number of changes to tax policy, including things like no tax on tips and overtime that the president campaigned on, which actually the next guest coming up at the Bloomberg Tech Summit, the CEO of Uber, Dara Khosrowshahi, has been advocating for. Gig workers like the idea of no tax on tips.
Yeah, Kaylee reminds us we have a couple of really great conversations coming your way. The CEO of Uber, live from the Bloomberg Tech Summit in San Francisco, up first. And later this hour, we're going to sit down with the mayor of Washington, D.C., Muriel Bowser, who is watching what's happening at the White House very closely for a couple of different reasons about fulfilling the D.C. budget with steep cuts that were initiated that the mayor is trying to correct, but also this looming parade. Donald Trump's birthday coinciding with the 250th anniversary of the U.S. Army. This is a big military parade we've been talking about.
June 14th?
June 14th. It's Saturday here in Washington. They're bringing in tens of thousands of troops to march in this parade. The mayor of D.C., though, has to keep the streets from crumbling under the weight of tanks and so forth.
Yeah, I'm interested to hear from her
Yeah.
a little bit more about that.
Relations with this White House and so forth. That's all coming up later this hour. Right now, Dara Khosrowshahi, the CEO of Uber, sitting down with Tom Giles in conversation live on Bloomberg. Let's listen.
That came out of Uber earlier this week. Thank you, Natalie Lung, for breaking that story about some changes, upper management. You promoted Andrew McDonald to Chief Operating Officer. You were quick to say you're not going anywhere anytime soon. You also said in your note something that was a little bit of a little enigmatic to those of us on the outside, that with Max stepping up, I intend to put focus on our 6 strategic shifts, spending more time with our tech teams. Tell us about what are the 6 strategic shifts, and why do you need to spend more time with the tech teams?
Well, I think if I talked about all 6, we'd be here the whole time. But for example, one that we talk about for us is becoming much more of a company in terms of the lifetime relationship with our customers. And one of the reasons why actually I wanted to bring Mac in as president COO, he's been at Uber longer than I have, for 13 years. He's an incredible veteran, incredible operator, is that the power we see in the Uber platform continues to increase. Now, what I mean by that is we have a relationship with you on the ride side. A lot of you using Uber to come here, thank you very much. And then our Uber Eats business is almost as large as our Uber Rides business, and growing very, very quickly and accelerating, if anything. And looking at a customer right now, the way the business was built, we essentially had a mobility business that Mac ran, a delivery business that Pierre Dimitri ran, did a terrific job. And it was almost like 2 businesses interacting with you as a customer. And now the focus for us is really moving to lifetime interaction with a customer, looking at you not just as an Uber customer, Uber Eats customer, but overall as an Uber customer, and how do we continue to build that relationship? For example, the membership program that we've got, Uber One, gives you no delivery fees and discounts on rides. We've got 30 million members, and people who use multiple products on Uber tend to have, transact with us much more, tend to have much more satisfaction with the product. And that's one of the reasons I wanted to get an experienced operating executive to really focus on the overall relationship with the customer rather than, separate P&Ls.
I think you said 1 in 5 of your customers are using both mobility and delivery.
It's about, now it's closer to a third now, so it's increasing steadily.
So it's moving in the right direction, right? What do you do to get that number higher, and where do you want it to be in, say, 3 years?
Well, listen, we want to get to 50%, and once we get to 50%, I want to go higher than that. And it's about the little interactions every day. For example, when I got a ride to the office the other day, and along the way, I was offered a coffee from Phil's to be ready for me along the way to the office, right? And so it's those little interactions that are value add to the consumer. It's like, great, of course I want my morning coffee, and if it can be ready for me right on the way to work, that's awesome. That is also a way to kind of get me to use Uber Eats, for example, if I didn't use it. Now I use Eats all the time. But it's these little interactions powered by AI, powered by personalization, understanding the context of where you're going, and there's a coffee shop close by to give you that opportunity. It's those experiences that we have to build more and more, which is one of the reasons now I'm going to work more with the tech teams, because they're the ones building these experiences.
I want to spend a little bit of time talking about your relationship with autonomous vehicles.
Yeah, sure.
It's up and down for Uber over the years, even preceding your tenure. You have stakes in a lot of AV companies.
Yes.
You talked recently about wanting to monetize some of those. Can you tell us a little bit, or your stakes in your equity stakes generally? You didn't specify AVs, but I am curious, have you identified where you want to focus? What do you want to free the cash up? Is it about developing deeper relationships with a select number of AV partners? What's the strategy?
So we want to essentially support the AV ecosystem and continue to help that ecosystem develop, and then AVs penetrate into the marketplace. AV, we think, represents a safer way of transportation. Ultimately, we think it'll expand the marketplace as it makes kind of safe transportation in cities available to everybody. So we're big fans of AV. And generally, we're working with multiple partners in the ecosystem, Waymo, for example, in Austin and Atlanta coming up, Wave, Avri. There are probably 18 partnerships that we have in the AV ecosystem, and we want to help these players develop by investing in them in some cases, but really by working with them to bring their product to market. These are technologies that are unbelievably promising, but they've taken billions of dollars to develop and 10 plus years. And it's one of those overnight successes that's kind of taken 20 years of development, but is finally ready to hit market, and we want to help the ecosystem get there. Separately, we have large stakes in many companies, yes, well over $5 billion, that we think we can take some of those stakes and essentially recycle them into additional investments in the AV ecosystem. So over a period of time, we'll get it right. We've got a ton of free cash flow of the company. So one way or the other, the goal is to build up the AV ecosystem around our network.
Build up the AV ecosystem. You guys have the UI, for example, that works really well. You have that customer relationship that maybe some of them don't. So is the idea you really want to kind of concentrate on a fewer number, or is it just keep the broad number of AV partners?
I mean, obviously, we want to make sure that we partner with the right players, and I'd say safety is the most important area. We want to make sure that they pass with flying colors through our safety case, which is actually pretty tough. But to the extent that the tech is there, the team is there, safety is part of the culture, we want to work with them. So right now, there are a number of promising partners, and you'll probably see the number of partners increase for us.
Okay. You mentioned your relationship with Waymo. We had Sundar last night. Asked him about when he's going to be able to take a Waymo from Mountain View all the way up to San Francisco. We're not quite there yet, but there are genuine concerns about the ways that you are both a partner and a competitor to Waymo. What is the conversation like internally and with your board over how you continue to deepen that, what is a valuable relationship as far as I can tell, but also keep it from becoming something that starts to undermine your business?
Well, the relationship with Waymo, I think the press and to some extent investors love to create drama because what the hell? But the type of relationship that we have with Waymo is very similar, for example, to the type of relationship we'll have with the Starbucks coffee. They're a great partner with Uber Eats, and at the same time, Starbucks wants to have its own app and wants to have interactions directly with the customer, and it isn't an either or, it's an and. So we offer Starbucks and Eats, and they compete with us in some ways with the Starbucks app and with their loyalty program, and that's fine. That's the way business goes. Same thing with Domino's. Domino's 3 years ago wasn't going to work with the platforms, now works with the platforms. And in the same way, in San Francisco, yes, we compete with Waymo to get rides here, but in Austin, Atlanta, we absolutely work with them. And what we're seeing in Austin is, frankly, the launch is going better than we expected. Number one is safety, and obviously Waymo's the best at it. And number two is customer love, and our customers are loving kind of the delight and surprise of getting a Waymo, and they're coming back. So I do think that this is going to be, it's not an either or. We're going to be working together. Waymo is developing its own channels, and at the same time, we can work together very constructively.
As we head toward an increasingly AV future, I know you've been asked about this before, but what are some of the new ways that you're seeking to overcome that challenge of reassuring drivers who are still an incredibly important part of your ecosystem,
very much
that
so.
You have their backs, but we also love these Waymos that have no driver in them?
Very much so. So one is growth helps a lot, right? So our business is growing almost 20% a year. And on average, we're going to need more drivers on the platform for the next couple of years. And I see that continuing for some period of time. So I think drivers generally on our platform are going to be more busy, are going to have more to do, and the number of drivers on our platform and couriers on our platform is going to grow. That's one. The second, though, is we're putting significant efforts in creating more work and earnings opportunities for drivers and couriers, right? We started with driving, we went to delivery, now you can actually shop, and there's a subsegment of couriers, et cetera, who will love their local Walmart, for example, or Albertsons, and shop in those stores. Or for Walmart, we deliver those packages. And now we're actually going further, where we're developing now what we call Uber AI solutions, where drivers are actually now labeling maps, translating language, looking at AI answers and grading AI answers. So, one way to look at Uber is that we are essentially a transportation platform. We'll help you go anywhere, get anything. Another way to look at Uber is that we are the largest on-demand work platform on Earth. And the first use case for us is actually transportation. And now we're expanding use cases into other use cases, and knowledge work is one of them. So I think as long as we grow, as long as we are honest with our drivers and couriers in terms of their expectations, and now expand the number of opportunities to them, I think we'll be more than fine.
You're actually getting your drivers, you're encouraging your drivers to help the AI and make it smarter, the AI that's gonna
it's gonna be a part of our life going forward, and it's good work, and certainly our drivers are qualified to do it.
How much of their time do you find they're spending doing that? I assume this is like in the course of a day's drive.
It's very small compared to the overall workload, right? We're doing over 33 million trips a day now in terms of our mainline segments. But Uber AI Solutions is a very, very promising growth segment for us. And I think in 5-10 years, it will be a significant part of the overall opportunities that we're giving to our drivers and couriers.
I want to talk about Bill Ackman.
Sure.
His relationship with Uber. It's nice to have an activist who's friendly, as far as I can tell. Tell us about the ways that you are interacting with Bill and how he is encouraging Uber to be better.
Yeah, so Bill is one of the legendary investors out there. So I was very happy. Like, I'm a fan of his kind of investing, fundamentals, long-term, making big bets. So I've always admired Bill. So when we found out that he was a shareholder, it was like, right on. And the cool thing about Bill as a shareholder is he uses the product. He is intensely interested in the product, he's talking to his drivers. So he gives me a lot of feedback, and actually a couple of features, for example, he was leaving dinner one night and he wanted to order Ubers for his kids and his parents. And for some technical reasons, we couldn't do that at the time. And we built that feature based on that idea, and it's proven to be a really cool feature. So you want the kind of long-term investor that Bill is, but what's cool about it is that he's actually, he's brilliant, but he uses a product and he uses it in a constructive way, and we've got a great relationship.
Speaking of relationships with folks on the East Coast, Silicon Valley has this really interesting relationship with the Trump administration right now, this need to engage, but also recognizing that there are policies that the Trump administration, like any administration, is pursuing that may not work so well for the tech industry. No taxes on tips, something that's part of the legislation.
Yes.
Something that you would say you support. Can you talk about kind of the dialogue that you have with the president, and what kind of feedback are you giving him on that? What kind of feedback are you giving him on the tax bill more generally?
Yeah, so one is no taxes on tips is, we think, a terrific piece of legislation. It will, if passed, save our drivers and couriers hundreds of millions of dollars in taxes that they would have otherwise paid. So we are big supporters of that.
Have you put a specific number on that over a time period?
It's in the hundreds of millions. I don't know the specifics, but it's significant. And we think it's appropriately targeted, to a segment of the population that we all want to succeed. And I've been very supportive of that directly with the president and our folks with the staff. And I see generally, we engage with every administration out there, both on a federal level and on a state level. We certainly engage with the Trump administration. And what I like in terms of what I'm seeing is that it is a pro-growth, pro-business in terms of kind of common business interest administration, and we'll continue to engage with them constructively going forward.
There's a lot of rhetoric around immigration
Yes.
and a lot of policies around immigration that have a mixed effect. What's your message to the Trump administration when it comes to limitations on immigration? You rely on immigrants for both drivers, for your engineers, across the board.
Yeah, so I think, and I'm an immigrant. You know, I came here when I was 9 years old, so I am absolutely pro-immigration generally for the U.S., but I think there's no question that we should secure our borders. And so I think from that standpoint, we're very supportive. Our drivers and couriers have been quite supportive of President Trump as well for similar reasons. And I think with immigration, you know, there is a dialogue for us to be had, which is what is the right level of immigration in this country, how, you know, we select, how we qualify, et cetera. That I'm hoping that we get to have that dialogue as a country. And I think that dialogue suffers from kind of the two sides shooting at each other. But I think that if we can just come together and recognize that this is a largely immigrant nation, and immigration done right can benefit society, done wrong, it can go the other way. So let's just focus on doing it right.
Well, for example, and it's not necessarily that we're building a wall on the northern border, but you on your earnings call talked about the ways that some of this sort of unwillingness to come to the United States because of some of its political stances toward foreign countries starting to affect your business.
We've definitely seen Canadian immigration into or travel to the U.S. Come down from historical levels.
Right.
The good news for Uber is that we're a global company, so to the extent that Canadians are traveling to Europe, they use Uber in Canada, and they'll be able to use Uber in Europe as well. So for us, the effect on the business is changing business mix.
Okay.
But as long as people travel and the global economies are doing well, which they are, we're going to interact with consumers one way or the other.
Have you seen any shifts since the last weighed in on this topic?
The biggest one is a Canadian shift, and that has, there was a, I'd say, initial significant effect, and we're seeing some of that continue, not all of it continue.
You talked about the consumer sentiment holding up. What have you seen since you last talked to the public about that?
Well, I'm not going to update. Obviously, we're in the middle of a quarter. But generally, we have seen for the past 2 years, and that has continued until last quarter, the consumer remains strong. We're not seeing any effects in terms of, you know, lack of confidence, et cetera. We look to see if consumers are trading down, for example, the kinds of restaurants that they're eating at, or are reducing the size of, let's say, their shopping baskets. We don't see any signal whatsoever. The U.S. consumer and generally the global consumer has remained resilient. And obviously, I'm hoping that continues.
I want to take just a couple seconds before I get kicked off. I get kicked off.
I get kicked off, I think. You're staying.
I understand that you are considering stablecoin as a vehicle for Uber. Talk about where your considerations are and how that might benefit your business.
Yeah, we're still in the study phase, I'd say, but I think stablecoin is one of the, for me, more interesting instantiations of crypto that has a practical benefit other than crypto as a store of value. You know, obviously, you can have your opinions on Bitcoin, but it's a proven commodity, and, you know, people have different opinions on where it's going. But I do think that stablecoin is quite promising, especially for global companies that are moving money around globally to create a mechanism for us to essentially reduce costs in terms of moving money internationally. So that's super interesting to us, and we're definitely going to take a look.
Taking a look at it closely. Dara, thank you so much for joining us today at Bloomberg Tech. It was great to have you here. Please,
thank you.
Giving him a round of applause.
That was Bloomberg Senior Executive Editor for Global Technology, Tom Giles, sitting down with the CEO of Uber, Dara Khosrowshahi, at the Bloomberg Tech Summit out in San Francisco. Seen and heard live here on Bloomberg TV and radio. I'm Kaylee Lyons alongside Joe Matthew live in Washington. And interesting to hear their conversation ending on stablecoin specifically is a stablecoin firm, Circle, made its public debut today, and it has been quite a debut. At one point, up 230%. For a check on that and more on these financial markets, we turn to Charlie Pellet up in New York. Hey, Charlie.
Well, thank you very much, Kaylee Lyons. Indeed, Circle right now up by 181%. We'll keep you updated throughout the day. The Dow, the S&P, NASDAQ solidly in the green right now, looking at an advance of 4 points on the S&P, overcoming earlier losses, 59.75 where we stand right now, up by under 0.1%. The Dow up 83, up by 0.2%. It has been a volatile day with the NASDAQ Composite Index up 15 right now, up by about 0.1%. The NASDAQ 100 Index up 0.1%. The Russell 2000 outperforming, up by 0.4%. 10-year at 4.38% with the 2-year currently yielding 3.92%. Gold is down $19 the ounce, down 0.6%, 33.53. And West Texas Intermediate crude up 0.8%, 63.32 for a barrel of WTI. Brown-Forman Corp, the owner of the Jack Daniels brand, is plunging the most in more than 15 years after reporting results that trailed expectations. Brown-Forman shares, they're down now by 17.6%. Again, checking Circle Internet Group, first day out, stock surging now by 200%. Back we go to Washington. Balance of Power continues right now. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Good to see you, Charlie Pellet. Thank you, as always. Charlie updating Wall Street for us as we follow the beat here in Washington. And it's been quite the beat today at the White House. Remembering at the beginning of this administration, everybody was asking, when Doge was the conversation every day, how long will this last? What would the falling out look like between Trump and Musk? We were told it would never happen, and of course we're watching it take place today. President Trump in the Oval Office with the Chancellor of Germany saying that he's surprised and disappointed with Elon Musk, who was tweeting in real time back at the president. We update this story now with the help of Bloomberg's Tyler Kendall. She's been watching it all unfold live at the White House. Tyler?
Yeah, hey, Joe. Well, it's really starting to get personal between President Trump and Elon Musk as they exchange these barbs. As you mentioned, it was pretty evident that Elon Musk was watching in real time. And this really all started with his criticism of that one big, beautiful bill and how it will contribute to deficit spending. And as you're about to hear, President Trump said that those claims took him by surprise.
I've always liked Elon, and it's always very surprised. You saw the words he had for me, the words of, and he hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible. It's the biggest cut in the history of our country. We've never cut. It's about 1.6 trillion in cuts.
Now, the CBO says that the House plan that the Senate is currently working off of would add $2.4 trillion to the deficit over the next decade. And President Trump also went on to say that this wasn't necessarily about Musk's ultimate view when it comes to how much is in this bill, but also his view on how the bill ultimately rolls back those clean energy tax credits. It's something that Elon Musk kind of played down and did dispute, even though our own reporting does indicate that Elon Musk personally appealed to Mike Johnson, asking him to save some of those clean energy tax credits that would impact electric vehicles such as Tesla. Also, one other thing to point out as this does continue to escalate, which is that Elon Musk is saying that President Trump isn't showing gratitude, alleging that he wouldn't have won the election without his help. At Bloomberg News, we have calculated the numbers, and Elon Musk contributed more than $290 million to the 2024 election cycle. That's, of course, based off of FEC commission records. About $255 million of that, Joe and Kaylee, went towards President Trump's campaign, and likely the number is even higher because that doesn't include super PAC funding.
All right, Bloomberg's Tyler Kendall live at the White House for us. Thank you so much. And we want to get more into this fallout and turn to our political panel. Jeannie Shanzano is with us, Bloomberg Politics contributor, Democratic analyst, and senior democracy fellow at the Center for the Study of the Presidency in Congress, alongside Lester Munson, principal of the international practice at BGR Group, our Republican strategist today. Lester, we don't need to debate whether or not President Trump would have won this election without Elon Musk's financial assistance, but there is a question about whether that financial assistance will continue for Republicans in the cycles moving forward. Do they need his money? Do they have reason for concern in 2026 and 2028 if Elon Musk isn't going to be there?
Well, it certainly would help to have his money. I guess the question is going to be, can the Republicans find other donors to kind of replace those resources? It'll be tough. Elon was no doubt a factor in the election last year, both at the presidential level and in other ways. However, he also showed in the Supreme Court election in Wisconsin just a few weeks ago that spending is not dispositive. He can spend a lot of money. He himself can be a divisive figure. There's a little bit of a double-edged sword here. So perhaps President Trump and the Republicans might see some advantage to having Elon Musk outside of the tent, although honestly, it's hard to imagine. I think on net, it's better for them to have him on the team.
Jeannie, we've heard a lot from both of these men today, the president and Elon Musk, and we should note that Elon Musk is taking issue with the idea that he missed his opportunity to say something in the White House. The president said Elon knew the inner workings of the bill better than almost anyone. Immediately responding on Twitter, Musk says, false. This bill was never shown to me once and was passed in the dead of night so fast that almost no one in Congress could read it. You heard Donald Trump last hour. We listened to this together, Jeannie, as he talked about what people experience emotionally when they leave his administration. He said at some point they miss it so badly, and some of them become hostile. I don't know what it is. He said, I guess it's Trump derangement syndrome. They become hostile. What's he talking himself into here?
He is diagnosing Joe Biden. He is diagnosing Elon Musk now with Trump derangement syndrome. He is playing doctor. The reality is for Donald Trump, this fight is not one he needs or should have. And, you know, I think he tried to put it off with that lovely goodbye ceremony we all watched in the White House, but obviously it did not work. And you look at what has happened in just the last few days, including allowing his staff to replace the NASA administrator. So much of it seemed focused on Elon Musk and some of the frustration that seemed to be there. So I think he is feeling that. And for the Trump administration, even if they get this bill passed, if history is any guide, they're going to have to sell it. And selling it is going to be much harder with Elon Musk off the reservation. So this is not just an issue of the astounding money that Tyler was just talking about. It's also an issue of the narrative. They've got to sell this thing. Difficult to do with somebody with a megaphone as big as Elon Musk on the other side.
Mm-hmm.
Well, and when we consider the selling of this, Lester, Republicans, as part of their pitch for this one big beautiful bill, have basically said it's going to avoid a tax hike, what they describe as what would be the largest tax hike in American history. But how much is that message effective against messages of how much actually realistically could be cut, the potential implications for Medicare, Medicaid, SNAP programs, the impact it could be felt in rural areas? Is avoiding a hike the same as feeling a cut?
Well, I mean, that's going to be the question, right? At the end of the day, the Republican Party is the party that cuts taxes. It's a little bit hypocritical. It always has been on spending. The Republican Party has never cut spending in the federal government. Reagan didn't. The Bushes didn't. Trump certainly hasn't, as much as their rhetoric would have you indicate. That's why this DOGE Act and Elon Musk's kind of presence in the administration was a little bit of a sideshow to the real thing, which is at the end of the day, Republicans want to get government out of people's lives, lower taxes, fewer regulations. So to that extent, this bill is going to be very sellable. If the Democrats can effectively use the fearmonger button on budget deficits and the debt question, and maybe even some of these Medicare cuts, maybe they'll have a chance next year. But right now, I actually think that even with the departure of Musk, President Trump and the Republicans are on fairly strong ground here. It's certainly not a perfect bill, but it does a lot of the things that the party has always advocated for.
Jeannie, I want to ask you about something that would normally be a pretty big story, but was obscured by this back and forth with Elon Musk, and that was President Trump's announcement last night to investigate the prior administration. And in fact, look into allegations that there was a cover-up of Joe Biden's mental acuity, and specifically, he talked about it today in the Oval, the use of the auto pen, which he describes as the big scandal of the last many years. He said, "Who is using it? I think I know. I'm not a big auto pen person. It's very dangerous. Usually when they put documents in front of me, he said they're important. I sign important documents, suggesting the auto pen should be reserved to sign letters from children, which he says they receive thousands at the White House every month. We only have a minute left. What's going to happen with this investigation?
Well, he's handed it off to the DOJ. I no question that they will look into it. But for Donald Trump, this is very much of a distraction. Everything from the Joe Biden investigation to the travel ban to the ban on international students on a Wednesday night at 9 p.m., an effort to distract from what has burst out. Nonetheless, despite all his efforts, is this rift with Elon Musk over this bill. Economy and
Shanzano and Lester Munson, great conversation. Thanks to both of our panelists today. And stay with us straight ahead on Bloomberg. Our conversation with the mayor of Washington, D.C., Muriel Bowser, joins us in studio on the fastest show in politics on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got Circle Internet shares, first day of trading, surging now by 198%. They were up as much as 235% after the company and some of its shareholders raised nearly $1.1 billion in an IPO that was upsized twice amid strong demand. Again, CRCL on the ticker, up now by 198%. The Dow, the S&P, NASDAQ have seen a volatile trading session so far, but right now advancing by 6 points. Wall Street refraining from making big bets ahead of tomorrow morning's jobs report. Right now we have got the S&P up 7, a gain there of 0.1%. The Dow up 110, up 0.3. NASDAQ up 200, up 22 for the NASDAQ Composite Index. That is a gain of 0.1%. 10-year 4.39%. The 2-year yield 3.92%. Gold is down $20 the ounce. Spot gold right now down 0.6%. West Texas Intermediate crude oil up 0.7%, 63.29 a barrel on WTI. Tesla shares are sinking as Elon Musk and President Trump's simmering feud devolves into a public war of words between two of the world's most powerful people. Right now, Tesla is down by 8%. Mattel and Fisher-Price, the Fisher-Price unit, have settled lawsuits alleging that their recalled Rock and Play baby sleeper was so defectively designed that it led to deaths of infants. Mattel up now by 0.9%. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie. We thank you, as always, Charlie Pellet, live in New York every day here on this program as we talk politics with a few plates to spin today. As we started this program inside the Oval Office in a meeting between President Trump and the Chancellor of Germany, the back and forth now between Trump and Elon Musk, sucking a lot of oxygen out of the room. But we try to keep focused on policy here. That's the point. That's why you listen to and watch Bloomberg. When we talk about this reconciliation bill, which Elon Musk is disparaging by the minute on Twitter, it's really boiled down to 3 sticking points here, 3 important issues, remembering that Republicans from the Senate Finance Committee went to the White House last evening. We talked to one of them, Roger Marshall, on the late edition of Balance of Power, just as he emerged from the White House. It's come down to 3 big ones. The idea of permanence, we talked about this yesterday, making permanent the business tax cuts. Also, some limits they're talking about on some pretty key Trump priorities, like no tax on overtime, as well, these new savings accounts, the Trump accounts, as they've called them, for kids. Also, of course, the SALT deduction. And we've heard this time and again, Senate Republicans want to change it significantly. And that's a problem if your name is Mike Johnson, the Speaker of the House, talking early today on Bloomberg Surveillance, on Bloomberg TV and radio, about the delicate balance that he struck in the House, one that could be easily disrupted by a change like that. Let's listen to Mike Johnson.
Remember, it took us over a year to develop this piece of legislation. We have 11 different committees in the House, all their areas of jurisdiction, that worked on the reconciliation effort to reconcile the budget. And what we're going to deliver here, again, is historic tax relief and savings at the same time. If we do not get this bill done, the tax cuts of 2017, the Tax Cuts and Jobs Act, will expire at the end of December. Every American will receive the largest tax increase in U.S. history all at once. It would be devastating for the economy. So we've addressed that here. We've made the tax cuts permanent, and we've infused it with a pro-growth series of policies that will get the economy going again. It will be jet fuel to the economy because we're going to reduce wasteful spending, we're going to reduce taxes, and we're going to reduce regulations as well. And that is what will allow job creators in the energy sector and everyone else to get going again.
And your version of the bill, of course, increases the SALT deduction cap, which yesterday Senate Majority Leader John Thune said, quote, there isn't a single Republican senator who cares much about the SALT issue. You and I both know you cannot pass this bill without increasing the SALT deduction cap. How do you envision, though, that deduction changing, given the fact that no senator, Republican senator, wants a vote for this?
Well, I appreciate that they don't. They all come from red states, right? As do I. And we have very different perspective on salt than our colleagues in the blue states, for example, in California and in New York, in New Jersey. But that is the reality in the House, remembering, and they have to remember, my Senate friends and colleagues have to remember, I have to deliver 217 votes to get that thing across the line if they modify it. So I had lunch with my Senate friends Tuesday last, 2 weeks ago, before we passed the bill in the House on that Thursday. And I encouraged them to modify it as little as possible, right? Because I gave a metaphor. I said, my friends, I am crossing the Grand Canyon on a piece of dental floss, okay? The equilibrium that we reached here took quite a bit of time to get to where we are. And you can't load me up on either side. And if you go and slash the salt cap that we negotiated carefully for over a year, it's going to make it very difficult for me to deliver the necessary number of votes. Remembering, I can only lose 3 in the House. They can only lose 3 in the Senate to get this done. So we're all working together. It's one team, House and Senate together, united in this effort.
Yeah.
They understand that, and I think they understand, certainly Leader Thune and the leaders over there understand the complexity of what we're having to deal with here.
Speaker Johnson, just to sort of put a bow on it, so 40,000 still likely to remain the cap?
That's what we negotiated here, and I'm certainly trying to hold to that number. And look, we've paid for it. I think we've got it worked out in all the math and the legislation, and I think it's something that I know they're not in love with it, but I certainly hope they'll tolerate it so we can maintain our vote tally over here.
That's the Speaker of the House, Mike Johnson, earlier today on Bloomberg TV and radio, speaking with my colleagues on Bloomberg Surveillance. Really interesting there when we consider the ability to tip this boat with one single change, never mind 3 major changes that could come out of the Senate as it goes back to the House. Now, of course, we talk about congressional matters every day here, and the budgeting process has been a big one, remembering that one major piece was left out of the budgeting process for this fiscal year, and that has to do with the District of Columbia. We talked about this, the potential for teachers and firefighters, police to be laid off with the federal city effectively defunded. It's a great pleasure to have the mayor of Washington, D.C. with us in studio today. Muriel Bowser is with us live on Bloomberg TV and radio. Thanks for coming in.
Thank you. Thanks for having me.
I'd like to start with you on this idea because we were talking about extraordinary measures here just weeks ago.
Yes.
And you've managed to avoid layoffs. Can you give me a sense of the budget that you just dropped that makes up for this shortfall, and how did you manage to avoid a crisis so far?
Well, we spent a lot of time, and unfortunately, it's diverted attention that could be used for other things.
Yeah.
Our upcoming budget, growing our city, our kids in school, but the Congress in the most recent CR neglected to exclude the district from limiting agencies to their FY24 levels, which for us meant about $1.1 billion in reduced spending. And we worked very hard to use an authority that I have to expand our budget by 6% and use some other funds that we have that have automatic authority to reduce the impact to just over $300 million. But it still meant that our ability to provide services has been impacted, but we've been able to maintain our team, teachers, police officers, and summer programming.
Do you have assurances that this will be fixed on the Hill?
Well, I spoke to the Speaker himself, and he told me that it wasn't a question of will, but scheduling. And so now that they're back, we're going to hold them to that because the district has been impacted by federal changes. The changes by DOGE, removing people from jobs, shuttering offices, is having a real negative impact on the capital city. And so this $300 million, if we can put that to work, then it will help us shift with the economy.
You just mentioned the layoffs here. According to the count from your chief financial officer, 40,000 jobs were cut on the federal level by DOGE. That's like having the equivalent of multiple neighborhoods all losing their jobs at the same time.
Yes.
So you've got $1 billion shortfall in the short run, and a very real issue for the long term. What does that mean for Washington, D.C.'s economy?
What it means is we have to shift and shift fast, but I think that the president and Congress can stop this. They can pause this. The courts continue to work on issues of fairness related to separations and making sure they're all legally done. But I think the American people expect their lawmakers and the president to say, what are these changes doing to our agencies? How is it affecting veterans? How is it affecting people who use Social Security? And certainly is having impacts on local governments all across the U.S. and especially us in this region, and not just D.C., but D.C., Maryland, and Virginia. We'll see changes to how we can run our cities because of the negative impact on our budgets.
What's the conversations you're having like now with the White House? The president talks about how dirty the city is, how it's time to clean it up and so forth. But we remember you learned a lot of lessons in the first Trump administration. A lot of ink has been spilled on the way that you've managed to manage this relationship with Donald Trump. How would you describe it?
Well, I think that President Trump left D.C. during COVID, which cities were ravaged by COVID.
Absolutely.
From homelessness to increases in crime to with lack of services because government agencies were shuttered. And we worked very hard to get that image out of his mind because that's not the D.C. of today. In fact, we've driven down crime to a 30-year low. Our tourism recovered in 2024. Our kids were the fastest back to school, and our school population has rebounded. In investment in D.C., people are looking hard at us because of some of the changes we're making in our business environment. We are lowering taxes. We are cutting red tape, and we are incentivizing good businesses to start here, grow here, and hire D.C. residents.
So do you feel like you have a partner in the White House or an obstacle?
Well, it's a partnership we work on every day. Certainly, the president has an outsized influence over the city of Washington because it's the nation's capital. So we like him to make some bigger investments like Union Station and continuing to be a partner in developing RFK, helping us retool and reskill our workers and asking him to pause on these separations and rehire qualified people.
I know you made an important hire on rehabbing Union Station, which is something that we all look forward to, those of us who use it all the time.
Good.
Does the president's staging a big parade, though, first? Is the city ready for it? This idea of tanks rolling down the street, that's not really going to happen, is it?
Well, they're going to have a lot lot of big equipment from the air and on the ground. And it's a celebration of the Army's 250th anniversary. The president has designated it a national special security event. So the Secret Service and the National Park Service are the lead agencies, and my agencies will be there to support it.
Is there going to be repaving that follows this thing, or can you actually keep this within the bounds of what the city can handle?
Our hopes are that the Army, you know, they're a big logistical agency, that they know how to move the vehicles in the right way. I know that they have allocated funds if street repair is necessary.
Okay, this is going to be quite a day. It's the 14th, right?
It's June the 14th, Army 250.
All right, we'll be here for it, of course. You've got a big stadium deal to work on.
Yes.
$3.7 billion. The Washington Commanders back to Washington. This is a big deal for the city as well. When you talk about the post-COVID era chapter for Washington, the city council's got some issues on the amount of taxpayer funding, also the fact that the team wouldn't be paying rent to the city. How do you get around it?
Oh, we'll get around it. Having the Washington Commanders back home is a top priority for the residents of the district. We secured 180 acres from the National Park Service at the end of December. The team will bring $2.7 billion in private investment to kickstart that project. There will be housing, hotels, entertainment, recreation, activating a very important part of Washington, D.C. So we'll get it done. It's a big part of my budget proposal that the council is working on right now. And it will generate jobs and tax revenue for us to invest in all 8 wards of Washington, D.C.
Maybe that's part of an answer to some of the federal layoffs that we were just talking about.
Absolutely.
You friends with Daniel Lurie, the mayor of San Francisco?
I think I've met him.
He was on Bloomberg a little earlier today. Great conversation. He said he has more fun than other mayors, and specifically said he has more fun than the mayors of Sacramento and Washington, D.C. Can you have fun in Washington in this political environment?
Are you kidding? This is the best city in the world. We have the best restaurants, arts, entertainment, culture, museums that are free, the best metro system, and we have fun here. We have lots of fun. San Francisco's a great town, too. I have fun
it is. Absolutely.
You can have fun there.
I think people misunderstand Washington. I've been here for a lot of years of my life, and I wish that a lot more people would go beyond the mall
Yes.
and meet the people who live in Washington and who are from here, because it's a beautiful city, and I'm glad that you could be with us today.
Thank you. Thanks
Mayor,
for having
thank
us.
You so
Thank
much.
you.
Absolutely.
Bye-bye.
Live in Washington on Balance of Power. We covered a lot of ground today, from the White House here to the federal city itself, and I'm glad that you could spend some time with us here on Bloomberg TV and radio. Stay tuned, of course, for Bloomberg Business Week Daily. That's up next, and we'll be joined starting 5 p.m. Eastern Time by Kaylee Lyons once again on the late edition of Balance of Power. More conversations and more politics from Washington as we debate reconciliation and try to get to the bottom of the bromance breakup. A lot of talk about Elon and Donald Trump today. It's not over yet, so stay with us for a lot more here on the fastest show in politics. I'm Joe Matthew. This is Bloomberg.